this is my sincere thank you to everybody in this room. You guys have been participating and posting pictures and asking questions and making me think outside of the box and changing the syllabus. And I can't tell you how much I appreciate it because I really feel like this classroom gets better when the participation is up. So let's keep that moving today. But before we do anything, guys, it's a busy day today in news. We had a lot of news going on at 8:30, both high and medium impact, and we're going to see it again at 10 a.m. And then at 9 p.m., I don't know if you guys heard, President Biden speaks. First debate tonight. That should be fun. Every morning I check news, not because I'm concerned about what they're saying. In regards, hey, good morning, Chef. In regards to my trading plan, news has zero impact other than I don't want to be in a position if I see high or medium impact news because it has the potential to make the market trade erratically. My entire trading plan is designed around advantages. My entire trading plan is designed around rules, and high and medium impact news can upset the patterns that I'm accustomed to trading. So I just avoid it. Everything that I talk about, guys, is coming straight from the education page, straight from Education Trading Guide. This is where all the answers are. This is where I got my answers between the education page and my brother. I use a mentor the same way you guys are using me. I request feedback every day the same way you guys request feedback from me. I post pictures in his Skype the same way I request that you guys post pictures to me. But the cool thing is every time he makes me a little bit smarter, I get to make you a little bit smarter. But I'm going to introduce you guys to the same way I started and the same way that I think really anybody learning the software should start. Guys, get going with what we call a high probability trade. Learn this one first. The high probability trade is a trade where each indicator on every chart agrees for the trade. Your triggers are going to be the strongest. There's going to be nothing in the way between you and your targets, no termination conditions. And we focus heavily the first hour every day on a high probability trend trade because this is the one that turns you into a chart reader. And 90% of your day is spent reading charts. 90% of your day is looking at your indicators and waiting to see if there's the advantages that you need to take a trade. Trades aren't gut feelings that the market's going to do something. Trades aren't hoping something happens. Trades are rather recognizing a pattern, a series of rules that have been proven, that have been studied, that have been back tested, that have been traded real time. And at the end of the day, you can say with the utmost confidence that this rule wins more than it loses. So I have to be prepared to lose because everyone loses, guys. Nobody ever runs 100%. I don't think there's anybody that I've ever met. Even looking over at the advanced room earlier this morning, one of the guys that's been with us for 19 years took a loser. He's like, yep, there's my loser. And it's no big deal because you know that's part of it. But if you know that you can win more than you lose, if you know that the pattern has been proven through your study to win more than you lose, well, then it makes sense to take it every time. And that's what we're doing. We're going to develop some trust. We're going to turn into chart readers so that we can see these advantages. And once you are, guys, your chart reading, you're going to understand where the market is likely to continue. Initially, you'll use that for the entry for the high probability trend trade. You'll understand where the market is likely to go. This is going to help you set up your targets. And then you're also going to understand where the market is likely to stop. And this becomes a giant red flag saying, hey, don't take that next trade. You've hit that brick wall. Take your foot off the gas, put it on the brake. Let's not take the next trade into it. Everything that we do, guys, in this first hour is the same thing that I do every hour. And I do this because there really is a very simple recipe to get to where you want to be. It begins with posting your trades in the class, guys. Make sure that you're posting. You've already seen a lot of people dropping pictures in here. You'll notice that they've annotated their charts. They've written on their charts what they see. If you're becoming a chart reader, it's important that you tell me what your read is, because if there's something that needs a little clarity, then we turn it into a lesson. And you'll be amazed. Sometimes you don't even know that I'm going to turn your chart into a lesson, but I find a way to do it. So we're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. I'm going to give you the rules for the high probability trend trade. Good morning, Paul. You guys simulate and practice and do market replay and post your pictures in the class. Every trade you take, win, lose, or draw. What you need is somebody to tell you what you did right or wrong so that you can correct behavior and repeat behavior. My hope is that you don't practice the wrong rules, that you don't play that I'm a simulator millionaire game where you just jump in, where you fight everything, where you break your rules intentionally to try to make that pretend P&L go up. Because what you're doing inadvertently is you're telling your brain it's okay to break the rules. It's okay to fight those strong triggers. It's all right to trade into these termination conditions. And you'll find that when you go live, your brain's not going to forget that. We will simplify. We're going to talk extensively about the high probability trend trade. I'm going to give you everything that you need for it, I promise. I'm going to give you the rules. I'm going to show you exactly what the rules look like. I am going to teach you how to study the rules so that you can develop recognition through repetition, through pictures. I'm going to put in your hands a very solid plan designed to optimize your chances of success. This is a plan that's been proven over and over and over, and I'm going to encourage you to stick to it, to keep it simple in the beginning. But you have to know what looks you're going to commit to, and that's the thing, and that's where the second part of your step-by-step path to becoming a confident trader kicks in. You have to know what looks you'll commit to, so you have to know what it looks like when there is a high probability trend trade. And then you've got to learn those looks, you've got to repeat those looks, you've got to take pictures of those looks and talk about those looks until it becomes easy. And the first step, the easiest way to do that, is every picture you take, write on your chart. There's only 3 rules for the high probability trend trade. Write the 3 rules every time, whether it's a high probability trend trade or not. Write the 3 rules every time and then relate back to your chart. Tell me what your read is. Tell me if your rules were met. Tell me why you entered. Tell me why you exited. And what happens, guys, is you get a private session every time you post in the room. We're going to talk about the advantages that are present. We're going to talk about maybe some disadvantages that were present. We're going to talk about the likelihood of success. Is your one-time victory lucky, or did you really have a statistical advantage? And then you're going to take that feedback, every picture, every trade, and you're going to drop it into your spreadsheet, guys. Your spreadsheet is, the first tab is a trade journal. And every trade that you take on Simulator, every trade that you take live, I hope you don't stop doing this when you go live, you should come back and study the next day. I can tell you guys, in the average day, I take about 40 pictures. The average day for me is approximately 40 pictures. Pictures of entries, pictures of exits, pictures of patterns that I recognize, pictures of my rules not being met, pictures of my rules being met, and sometimes just pictures as I study new patterns, as I look at new charts, as I look at different management plans. My entire quest for knowledge revolves around pictures. Yours should too. Because if you go back and study everything this morning, what you did yesterday, you're going to find some common occurrences. Maybe you fight trigger lines. You're fighting that momentum. Maybe you're trading in determination conditions and it's not serving you well. What happens is every time you present, I'm going to see your patterns. We're going to talk about your patterns. And then we're also going to talk about the patterns in the market that are bringing you that success, that are making things difficult. And you really will feel relaxed on the good ones, and you're going to feel a little forced, a little nervous on the bad ones. But this little study every morning, it's going to set you up for the day, guys. It will accelerate your learning. And I am going to show you my spreadsheet. There's a copy of the tracking right there. Make sure that you're taking your feedback from the classroom and dropping it in the notes section. There's the 101 section. And this is where I've broken down the 3 rules of the high probability trend trade with pictures, and I'm going to give you a little worksheet, some homework, so that you can become proficient with the looks. The favorite looks is where you're going to develop your trading plan, what it looks like so that it's easy, management things, patterns, terminations. And then I've got the same thing over here on client trades, where I've put a little bit of work into it. You've got about 350 plus pictures of high probability trend trades. Some of them are medium probability trend trades, but all of them are done well, which is how they made it into the spreadsheet. This is over 350 pictures that you can go back and study, guys. Remember, you have to know the looks so that they become easy. If you see the same thing 100 times when the market isn't moving, it's easier to recognize it when the market is moving. There's a section on management and patterns that repeat themselves, guys. There's the high probability trend trade entry sequences, a very mechanical management straight out of the plan. There's a whole section dedicated to termination conditions because that's where new users tend to fudge things up the most. So post your trades, all of them. If you have a question, take a picture of your chart, circle where your question is, type it on there. Get in the habit right now of posting in the room lots. So if you're brand new with me, you've got Capture software, don't show me a chart. That's nerve-wracking if you're brand new. Go take a picture of your dog. Drop it into the room, right? Take a picture of your cat. Drop it in the room. Take a picture of your sports car. Drop it in the room. Give me something to let me know that you can get a picture into the room. And if you can't, raise your hand and say, hey, Mark, let's talk about putting pictures in the room. I'm always glad to help. Make sure that you're annotating your pictures. Tell me what you see. Make sure you're getting those pictures into your spreadsheet so you can go back and study them. And guys, let's talk about a high probability trend trade. This is a trade that typically wins 70 to 80% of the time when you follow the rules. This is a trade that creates an enormous amount of confidence through the memory of success. And this is a trade that teaches you to read your indicators, guys. And notice that it's only 3 rules. That's it. It's just 3 rules. Man, D, I'm not sure what you posted. Oh, there it is. So cute. Guys, this 3 rules. Each rule is designed to create an advantage. So rule number 1 says that your large chart must have strong triggers. When rule number 1 is true, you will have the advantage of momentum. Rule number 2 says no termination conditions, room to the profit target. And when that rule is true, you will have a clear path. If you focus on talking to yourself, do I have momentum? Is there a clear path? And you do that every time you look at your chart to get into a trade, what happens is you recognize when it's easy street and when there's challenges, and maybe you have to manage a little more aggressively if you take that trade. And then the momentum and the clear path will take you to the entry area. And the entry area is going to grow as you grow. The more you can see, the more entries you're going to find. But the key is you have to have the rules to put you into the market, because once you have the rules, you're trading something with a statistical advantage. You're trading a trade that has been proven to win more than it loses. So we're going to start off, guys, 3 rules, and we're going to do it on only 2 charts. How cool is that? You'll be able to take the most current bar on your large chart, and it will define direction, it will define momentum, and it will define the areas that may be problematic. And it's a very broad stroke of a brush, guys. It's a slow moving chart, and it shows the overall opinion of the market. Rules 1 and 2 are met on the large chart. The large chart should lead the way. I want you to buy a coffee cup and write it on there. The small chart is your entry chart. It refines the broad stroke of brush. Inside of this 1 bar, on a smaller, faster chart, there's 15 to 30 bars, depending on the movement. And it literally pinpoints your area for entry. This is rule number 3. It's going to afford you the least amount of risk and the highest profit potential. And guys, we never even look at the small chart until the rules are met on the large chart. And we use this 2-chart process because it's really a reflection of who's in control of the market, guys. The large crowd wins. The large crowd is going to define the direction of the market. If they want it to go up, it's going up, no matter what you want to have happen. The large crowd is going to create the momentum that we use to have that advantage. And the large crowd is going to react to those key Fibonacci areas on your large chart. And what's going to happen is they're going to enter and they're going to exit. And sometimes the buyer large crowd and the seller large crowd are just going to duke it out. And we don't want to be in the middle of their fight, guys. We want to go with the flow. The small chart, the refinement chart, the entry chart is a representation of the small crowd. There's always the yahoos that fight the big crowd, right? They got some money, but they don't have large crowd money. And they create these little shove backs on a small chart. You're going to be able to capitalize. You're going to be able to take those little pushbacks and get into the market where the market is most likely to continue. So we're going to let the large chart define momentum first. On your large chart, if the background is green, Your brain has to be saying the market's going up. If the background is red, your brain needs to say that the market is going down. And the reason we do this is because when the small triggers break above the large triggers, it paints that background green. And the only way that I can have odds favorable momentum is if my small triggers, these solid lines, break above and away from my large triggers, these dashed lines. And it's this space between the two. I want you to think about scissors opening. It's the space created between the two that lets me know that the odds are favorable for the market to continue up. Guys, odds favorable momentum is our battle cry. Odds favorable momentum pushes the market in the direction of the trend. Odds favorable momentum can break key Fibonacci areas. Odds favorable momentum can even cover some mistakes or afford you a little extra room to manage trades. In an uptrend, it's pretty obvious. Small's above the large, larger wide, there's a space, boom. We're going to buy Fibonacci support on a smaller, faster chart when we have this look. This tail, this wick on one large bar is that entire retracement, that shove back from the small crowd. You guys will be able to pinpoint exactly where that tail is most likely to form. In a downtrend, small's below the large, larger wide. Notice that the colors match. When the colors match, that potential for momentum is present. The space between the two, the scissors open, lets me know that the odds are favorable for the market to continue down. Guys, this is odds favorable momentum. This is the best of the best. This is when you're going to sell Fibonacci resistance on that smaller, faster chart. So strong triggers up, strong triggers down, and just like anything wonderful, guys, it typically goes away even for a moment. So when these scissors close, when the small triggers work their way back inside of the large triggers, we're going to call this a weakening of the large triggers. And when I have weak large triggers, anything can happen up or down. I am very much a fan of language. I'm very much in 100% belief that if you associate the words odds favorable momentum with this look, or you associate the words anything can happen with this look, what happens is you're less inclined to trade with that loss of momentum. So let's go see if this is something that even happens in the market, guys. I took all of my indicators off of a large chart for crude oil. And I want you to see strong triggers, everything says up. The momentum is the best. There's one of those tails. Pretty cool, right? Small triggers below the large, everything says down. And this market continues down into weakness. And that's what's creating this little pushback. And then the smalls are on the wrong side of the large. And it pushes back even more. And then odds favorable pushes the market up. Is this amazing or what? And then weak triggers, there's your reversal. And we are in that odds favorable. And dollars to donuts, we had an area right here. Weak triggers again. And this is where we're currently at, guys. Can everyone see how we do, in fact, have odds favorable momentum on the large chart? That we do have smalls below the large. Everything is wide. Nothing says that this market is likely to stop. And we're going to circle a tail too to go look for entries. So strong triggers and weak triggers, guys. Scroll back. Strength pushes, weakness, there's a bounce. Strength pushes, weakness, there's a bounce. How many times do you suppose we could do this in a day? Strength pushes, weakness precedes the reversal, triggers return, precedes the reversal. And guys, this is without the benefit of Fibonacci areas right now. This is just trigger lines. So if you scroll back 10 days and you look at how often strength pushes and weakness reverses, you're going to become a believer. Get in the habit of taking pictures of those, guys. Are there any questions about momentum? Everybody's good with this. Strong triggers are the best for the brand new user. Odds favorable, likely to continue. Let's pinpoint a tail by using a smaller, faster chart for entry. And then, guys, as those small triggers work their way into the large triggers, one line is visually you're saying to yourself, man, I'm losing momentum. It's not odds favorable anymore, but it still might be all right. Let me use my chart reading, see if there's an opportunity. And then, man, when they are weak and they're at areas, anything can happen. These are when areas are more likely to hold, guys. And that's kind of our segue to rule number 2. Can you guys give me a why if you're okay with momentum? And this is important to me to make sure nobody gets left behind, especially my new folks. Can you guys hear me? It's so quiet. Daryl S says, yeah, I get it. Clara, you're good. Andrew Z, how we feeling? Izzy got game. Not so bad, right? D likes it. Cool. All right, so let's go to rule number 2. Once I have momentum, and you know what? Before I talk about rule number 2, I'm going to put areas back on this chart, because on your large chart, that's where the large crowd tends to react to areas. And when they reach these areas, they're going to make decisions, guys. And this is when areas can become termination conditions. And if I have a termination condition, then I won't have room to my target. And if I don't have room to my target, then I won't have a clear path, and rule number 2 could never be met. And rule number 2 is the second advantage that we need, guys. So let's find out how to identify it. First, we have to know what we're looking for. Termination conditions are Fibonacci-based indicators that may reverse the market, guys. And this is based on a comparison between the trigger lines, the same trigger lines that create momentum, and those areas. So we're going to look for, on the large chart, Fibonacci support. On the large chart, we'll look for Fibonacci resistance. On the large chart, we'll look for yellow 1-to-1s. On the large chart, we'll look for cyan divergence low lines, and on the large chart, we'll look for magenta divergence high lines. That's what we call beating a dead horse. All of these lines are where decisions are made, where the people in control pushing it down are going to make decisions. So the first thing that must happen to identify a termination condition is that price reaches the area. Your dynamic Renko bars come down and make contact with the area. When they do, what happens is the decision-making process gets set off. And guys, I have never, in the time I've been trading, had a memo sent to me. I've never had an email sent or a phone call that said, hey Mark, this is going to be my reaction. Brace yourself. So what I do is when price reaches an area, if I reach support and the trigger lines are above the area, I always ask myself, where are my triggers? If they are above the area, support is behaving as a termination condition in that moment. And you just don't know what the reaction is, but it may reverse the market. If you're trading up into resistance, price reaches the area, triggers remain below it. In that moment, it's a termination condition. There is no clear path. No more short trades into this area. No more long trades into resistance. Rule number 2 is met when both the small triggers and the large triggers get to the other side of support. When both the small triggers and the large triggers get to the other side of resistance. It has absolutely nothing to do with your price bars and everything to do with your triggers. Your price bars set off the decision-making process. Your triggers give you the best shot at understanding what that decision will be. So, for brand new users, it's either a termination condition or it's a clear path. So let's go back to our large chart again and see if these lines do in fact stop the market. Fibonacci resistance, stopped it cold with weak triggers, pushed it all the way to support. Guys, we currently are into support and the triggers haven't broken. No more short trades according to rule number 2. Here we have that weakness, but they break through the triggers, pushes back, and it continues up to hit that next area. Guys, there's your support to resistance to support, and off that market goes. Right off of weak triggers at support, no triggers through termination. Resistance for the win. Gosh, this is crazy. Price breaks, pulls back to support, and continues up. Divergence low line, reverses the market. Are you guys starting to see a theme here? How these lines on your large chart can stop the market in their tracks. How these lines can ruin your good time if you're looking for a trade. Guys, that's what I want you to understand. Rule number 2 is the most broken rule among new users, because what happens is we start to say, but Mark, I have momentum. But Wayne, I have momentum. But Tooth Plumber, there's momentum here. I want to trade into this area. And what happens is more often than not, guys, 60% of the time it works every time. Termination conditions are going to ruin your party. They're going to take away your good time. You can see it happening live in the market right now. Look at the bounce. coming off of Fibonacci support. It's not a coincidence that it's happening live right in front of you. So, brand new users, it's either broken or it's not. It's either a termination or it's a clear path. That's the easiest way to become a chart reader, is keep it focused. Once you're good at these two, you're going to recognize this look right here. This is what we call a 50-50 look. And a 50-50 look means that the small triggers have absolutely smashed through the area, but the large triggers are dragging behind. They haven't made it through to give us that clear path. With odds favorable momentum, this area has the potential to break. It's not broken yet, though, because we know that the large triggers have to get to the other side, so it's only potential. And since it's only potential, rule number 2 isn't met, which means that it's not a clear path, which means that if you decide to take a trade here, you should be very focused on momentum, not forfeiting that first advantage. You should be very focused on making sure that you can take a low risk entry, because it really is a bit of a maybe trade. Maybe it'll break, maybe it won't. So guys, termination conditions are going to save your bacon more often than not. Even when the market is absolutely screaming down with all that momentum, when it hits these yellow 1-to-1s, each and every one of you in this room, all you have to do is say, hey, where are my triggers? And if they're above those yellow 1-to-1s, you've got to say to yourself, man, my clear path is gone. I don't have that advantage. I might as well be driving a Yugo into a brick wall and hoping for the best. So you choose not to take the short. And look at the bounce. There's one loser avoided. And some of you go, well, if I can't go short, I'm going long. And you trade directly into resistance. And all the triggers are below. And that you avoid another loser if you choose not to do that. And your trigger lines don't match each other. One is green, one is red. I don't have odds favorable momentum. I'm not taking a trade here. Still not going into resistance. I still don't have momentum. And guys, if you reach a mid-band and these large triggers are a full bar away, hey Dan, welcome to the room. This mid-band is a termination condition. And guys, this happens all the time. This is what we call the gap theory. When price accelerates away from large triggers, hits something, and the large triggers are a full bar away, it's likely to close that gap. So no long trades here. Still not a clear path. And then guys, what happens is after you sit through all of this nonsense, this is your 90%. This is where rules aren't met. This is where you avoided 5 losers by sticking to your plan. Eventually, the smalls are outside of the large. Eventually, all the triggers are above resistance. It's behaving as support. And look at this. We haven't reached the next area. And there's one of those tails, ladies and gentlemen. You will have the ability to pinpoint exactly where that tail is most likely to form. And this becomes your entry for the highest probability trend trade. The hardest thing, hey, Kenan, the hardest thing that you will ever do as a day trader is absolutely nothing. And I know that sounds ridiculous. Mark, doing nothing is easy. I was a teenager once. I did nothing for 4 years straight. When you're in the market and you're looking at these fluctuations and the market is bouncing and your rules aren't met, you're going to be just dying to get in there because you're going to believe that you're not making money. But what you're doing is you're not giving it away needlessly. And if you wait for the best of the best and you don't lose any money here, you get to keep all these profits. If you fall victim to opinion, if you start breaking your rules, if you start hoping, wishing, and wanting, well then you're really hoping that the correct trades undo the damage that you do with the incorrect trades. So guys, that's termination conditions. Lines on the large chart create problems. Lines on the large chart are where decisions are made. Lines on the large chart will tell you no more trades into this area. When lines on the large chart reverse the market, so if price reaches yellow 1-to-1s and none of the triggers break, and then these large triggers roll, and this is what we consider a reversal, guys. As long as these large triggers are still down, that market still has a lot of potential to still push down. Rob gave us a great example of it earlier that I'm going to look at. So a reversal is defined by the large triggers pinching and rolling. A reversal means that those large triggers went from red to green, and we're going to use this to signify that the market reversed. And when it happens from a termination condition, that's what we call a strong bottom. That's the best of the best. And I want you to see this. Rob gave us a picture. And Rob said, check it out, Mark. Weak triggers at a termination condition, right? Look, looming for a reversal was his words. And Rob, I don't disagree. That's a great look. That's a reversal potentially looming. Does everybody see how the large triggers are still up and they're strong? And I want you to see what those large triggers did. They pulled price right back up to that next key area. Pretty cool, right? So a reversal is down here. That's your strong bottom. This is just a termination condition, and it's going to remain so until these large triggers go red. So good lesson there. And I realized that I needed a little clarification on that from something that was said yesterday. So whoever said that yesterday, thank you for that. Lines on the large chart, guys. Sometimes the large chart, that slow chart, that broad stroke of a brush chart, sometimes it turns from the middle of nowhere. Sometimes you have a clear path and it just goes up. Sometimes you have odds favorable momentum and a clear path and it just goes down. I'm going to give you one termination condition, and this is the only termination condition that I look for on a small chart. So if my large chart says up, if my large chart has a clear path, and I say, man, it's time to look for an entry, if I see 3 divergences on the small chart, 3 losses of momentum, guys, that's all divergence is. Price goes down, it goes up. If momentum doesn't follow price, you're going to see a blue line from a low and a magenta line from a high. 3 of these in the same price range may terminate the trend. It becomes more powerful if you employ that little anything can happen look. Makes it more powerful still if that third pivot's higher than a low or lower than a high. And what happens, guys, is if I go to look for an entry and I see 3 divergences, I have to say to myself, dag nabbit, rule number 2 isn't met. I don't have a clear path. 3 divergences may reverse the market. And you're going to see this look at a low, guys, and that look at a high. When the large chart can't give you that information fast enough, when the large chart, it's a slow-moving chart, it's making you think that everything's going up, but your small chart's saying, hey, let me show you the change that you can't see. So 3 divergences on a smaller chart will identify these tops and bottoms, or these reversal points. And that's the only termination condition on a small chart that we look for, guys. 1 divergence on a high probability trend trade doesn't bug me. Momentum is defined on the large chart. Even 1-to-1s, hitting 1-to-1s on a small chart doesn't freak me out. Termination conditions are defined on the large chart. Only 3 divergences. So guys, that's rule 1 and 2. We have odds favorable momentum at this point. We have a clear path. Nothing in our way. Is everybody comfortable with these 2? Can we go on to entries? You guys want to talk about entries? Let's figure out how we pinpoint where the market is most likely to continue. Because rule number 3 says let's take advantage of that small crowd, guys. And rule number 3 says that you're going to be so precise, Izzy Got Game. You're going to be so stinking good at knowing where the market is going to reverse Adamos that Ty Man is going to use a limit order and literally wait for the market to come to him. And he's going to wait for it at areas. Fibs, midbands, yellow 1-to-1s. Guys, areas on the large chart might be waving huge red flags. Areas on the small chart give the market something to bounce off of to continue with the trend. But here's the deal. We want to see these areas inside of triggers. And more specifically, I want to see them inside of what we call favorable large triggers, guys. So let's have a quick little what's a trigger lesson. And every one of you know this, and it's kind of funny. I am the least techie guy in the world. I know squat about programming. I couldn't create one of these indicators if my life depended on it. But what I'm really good at is identifying the patterns that they create and relaying that to you guys so that you can identify them as well. Price returns to triggers, guys. Price comes back to those large triggers all day long. If it works outside, it pulls back to the large triggers on the large chart. If it pulls away and hits something, it pulls back to the large triggers on the large chart, guys. Price loves to return to large triggers. Well, we have 2 charts. We have large chart, large triggers, and we have small chart, large triggers. So what we've done is we've taken the large chart, large triggers and put them on the small chart. We call them synthetics. You'll see them. They look stepped. When the large chart triggers from both charts are overlapping, one on top of the other, when the large and the synthetics are overlapping like two snakes riding piggyback, what we've done is we've taken the point where we expect price to return to, and it's overlapping. It's become one spot. Overlapping triggers are what we call favorable large triggers. High probability trend trades come from areas, fibs, mid-bands, yellow 1-to-1s, inside of these triggers, guys. Trigger lines are what we call a correction point. The market breaks away from it and it corrects to large triggers. But guys, that's a big gap. That's a big gap. That's 8 bars. So we're going to use areas inside so that we can pinpoint exactly where the market is most likely to continue. So when the large chart says up, the background is green. When my small triggers are above the large triggers, there's space between the two. I have the advantage of momentum. Both my small and my large triggers have cleared resistance. It's behaving as support. Right up here at the top of this bar, when you're feeling the most left out and scared the market's going to run without you, the small crowd jumps in, guys. The small crowd jumps in and they give you that shove. They rarely beat the large crowd. Maybe 20% of the time they beat the large crowd. So those tails that we talked about, we don't trade these tails. We trade areas inside of favorable large triggers. But historically, if I circle a tail and it lines up with one of these, well, then I know that I have a high probability trend trade. So how do we pick it out? Let's go. There's your favorable large triggers. When they're not stacked, indecision. Everything says up. Everything says strong. There's nothing in the way. On my smaller, faster chart, I'm waiting for a reversal bar. The reversal bar signals the beginning of the pullback. Remember, I'm going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. The reversal bar signals the beginning of the pullback. The reversal bar is not the entry for the high probability trend trade. The reversal bar actually typically puts you on the wrong side of momentum. And that little loss of momentum is what kind of helps us get back to our areas. So the reversal bar says, hey, let's find those favorable large triggers. And you can draw a box, a circle, highlight, whatever you want. From the top of the triggers to the bottom of the triggers, large triggers. Don't worry about it if they're large or synthetic. It's unimportant. What's important is that they overlap one on top of the other, because this is going to give you the smallest space to let there be areas inside. The areas that we're looking for, fibs, mid-bands, yellow 1-to-1s. One is not more important than the other. Lines inside of favorable large triggers are the brick wall we need to create a bounce. So, reversal bar says, hey, here comes the fight, not your entry. Hitting the triggers says, all right, we're at the very top of the correction point, not your entry. The areas inside create what we call the window of opportunity. From the highest point of support to the lowest point of support, this blue box is exactly where we expect that market to continue from. If this high probability trend trade is going to work, I should get a bounce off of one of these areas inside of favorable large triggers. But because of the strength of the large chart, because there's nothing in the way on the large chart, I'm going to use the highest point of support, a tick or two above it. I'm going to activate my limit order, and I'm going to hope that the small crowd can do their thing. I'm ignoring areas beyond the correction point. I don't expect price to get below these triggers. If it does, I don't want to be in it. My advantage is gone. Short trade's the exact same thing, guys. Reversal bar is going to print. Signals the beginning of the fight. This is not my entry for the high probability trend trade. I'm going to identify my trigger lines, large and synthetic. Are they overlapping? Are they one on top of the other? Are they angled in the direction of the trend? If so, they are favorable. And when price reaches those triggers, I'm not going to enter the market. That is not my entry. This is just where I expect price to correct to. But I'm going to identify inside of favorable large triggers, fibs, mid-bands, yellow 1-to-1s. I have one line inside of favorable large triggers. I have one point where the market is most likely to continue. My limit order goes 2 ticks below it, and I hope, wish, want, and pray that the small crowd can get me there so I can enter the high probability trend trade, guys. This is your entry all day long. This is the best of the best. And look at that. Let's look at both of these circles. What do you say? Let me pull up my small chart too. And I don't know if these were trades or not. I do know that this only had the potential to break at the moment, but it sure enough pulled right back to support inside of the triggers, and it never got beyond that correction point, and then it continued down. How cool is that? There's another one. Let's see. Pulled right back to support, right at the top of those triggers, never got beyond the correction point, and look at all that money to be made. Guys, this is how you're going to study it. Let's scroll back. Let's see if we can find another just for grins. I do love grins. There was one. That was yesterday. Guys, this isn't a trade that happens every 8 minutes. But when it does set up, don't miss it. This is where your advantages lie. Are there any questions about momentum? Are there any questions about finding your window of opportunity? Any questions about termination conditions? So here's the cool thing. If you give me a couple weeks of really focusing on entries, really pinpointing where the market is most likely to continue, you're going to understand where the market shouldn't go. You're going to have faith and trust in the idea that the trigger lines are only a correction point. You're going to have faith and trust in the idea that it's the areas inside of favorable large triggers where I'm expecting that bounce. And your initial stop is going to go outside of those trigger lines, about 4 or 5 ticks. And you're going to say to yourself, if the small crowd can push beyond that correction point, I don't want to be in the trade anymore. I choose to get stopped out. I'm going to be okay getting stopped out. I'm going to get stopped out 2 or 3 out of every 10 high probability trend trades I take. Every 100 trades you take that fit the rules, you're going to lose 20 to 30 of them, guys. You have to be mentally prepared to accept losses. Losses are a part of trading. They're a normal part of a positive equity curve. And guys, I'm going to ask again today, if you'll do me a favor, if you'll use the screencast link as opposed to copy pasting. Discord, for whatever reason, is struggling with the copy paste. If you'll use your screencast link, it's so much better. Class is going to be so much more efficient, and I won't have to keep rebooting Discord to see your pictures. Thank you. I forgot to say that this morning, Paul. Here's the other thing that's great about understanding where the market is most likely to go. Once it starts going from that point, once you get a confirmation bar, reversal bar, you can put your stop a couple ticks above it, and you can say to yourself, the momentum is working, the clear path's in play, the bounce has happened. At this point, my risk is minimal. And guys, it's not uncommon at all to see you guys pinpoint beautiful entries, to respect that reversal bar, to move your stops, and maybe only lose 20 or 30 bucks on one of that 20 to 30%. And this right here, creating smaller losses, lets the wins become bigger wins. So a few things that happen when you're looking for the high probability trend trade. This is new user stuff, guys, and you're all going to go through this, and we've all gone through it. There's only 5 ticks to get to that fib. Remember that we buy pullbacks. And when you buy a pullback, there's magically 27 ticks to get to that fib. Adriana, do you need me to go over them before you leave? The small triggers will probably turn against you on your pullback, guys. It's all right. Momentum is defined on the large chart. Don't get caught up in the fluctuations on the smaller, faster chart because you're going to get stopped out. No, Rob. We'll cover that in a second. And guys, this is what's going to happen in the second hour of class is we're going to go through, and I will cover it, Rob. And this is why language is so important. Adriana had one line outside of the large chart. She had a clear path, and she bought support inside of favorable large triggers. She took her first profits, and then she chose to exit. I don't know why your exit was so far down. Nice trade, Adriana. Pretty easy money when you're trading with direction. Pretty easy money when you're trading with that clear path, and pretty easy money when you're letting the market bounce right off of those areas inside of favorable large triggers. That's a beautiful trade. It's a tough hold because part of you says, well, it should continue up because of the large chart. And that's the NASDAQ thing, guys. You're going to see that on the NASDAQ. Next one, same thing. Everything says up. She's almost cleared the path. She's bouncing off of support inside of favorable large triggers. And she rides that wave to the next fib. And guys, notice that she exits at the fib and doesn't hope that it breaks with those weak triggers. Adriana, beautiful trading. Trading with direction, trading with momentum, trading from areas on the small chart so that you can manage your risk aggressively. Absolutely beautiful. Thank you for posting those. Be safe on your scooter. 710 today. That's not a bad day, Adriana. 2 trades, 710. Can I pull out my calculator? I just want to see something. Guys, I like doing this sometimes. So she only made $355 each trade, right? That doesn't feel like a lot of money. If I cut her 710 in half, and let's say she could only do 50% of that every day, and there's 252 trading days in a year, that's almost $90,000. And guys, that's worst case scenario. That's only 50% of what she just pulled off today. She's only going to get better. What happens if she starts hitting $700 a day? Almost $180,000. Guys, home runs don't pay the bills in day trading. Taking the correct trades, avoiding the wrong trades, and getting paid at trouble. That's what sets you up for the win. And then Rob, we don't wait for a reversal bar. If it's a high probability trend trade, Rob, let me go back to it. If it's a high probability trend trade, if my large chart is screaming to the upside, if my large chart has a clear path, what's going on is this is a 10,000 horsepower diesel and it's doing 100 miles an hour and it's hard to stop. Your entry is a limit order waiting at the area inside of favorable large triggers. That's the entry for the high probability trend trade. Does that make sense? We're not waiting for a reversal bar to enter. We're using the reversal bar to reduce risk. Does that make sense? Pullback to an area. Areas can be fibs, mid bands, yellow 1-to-1s. It's the same recipe every time. Guys, one of the things that I really encourage you guys to do in the beginning as you're learning, and I'm going to show you exactly what it feels like. This is your focus. Right here. Your focus for 20 days is first being able to identify momentum. This will take you about a day to understand momentum. I believe that in my heart. The next thing you have to do is understand termination conditions. This might take you a few days. And then once you have this, once you understand clear path and momentum, and guys, it's not difficult if all you're looking for is clear path and momentum. You have to literally write on a giant piece of paper in bold print, my entry comes from a pullback to an area, fibs, mid bands, yellow 1-to-1s, inside of favorable large triggers. Man. So what happens is momentum is easy, guys. Smalls above large, smalls below large. Takes you a second, right? Termination conditions get pretty easy because if you always ask yourself, watch this, did price reach an area? And if the answer is no, are my triggers above previous area? And if the answer is yes, I have a clear path. And it really is that simple. But what happens is instead of focusing on momentum, instead of focusing on the clear path, instead of focusing on the language, we're going to do this. Instead of focusing on the language for the high probability trend trade, you see John Novak putting a momentum trade over here. You see Pete doing something here. You see Izzy over here. You see Troy right here. Clara's down here. Walter's over here. Paul's right here. Jonathan's over here. And everybody's posting rooms, or posting in the room. And none of them are your damn high probability trend trade. And all you want to do is what they're doing. But the thing is that all the people taking trades beyond the high probability trend trade have done their work, they've done their study, they recognize these advantages, and they've grown from that point. And the more you look for as a brand new user, if you're always searching for momentum trades when you haven't figured out a high probability trend trade, you're going to struggle. If you're looking for counter trend trades, if you're looking for high volume area trades, if you're looking for these jump in trades that everybody is so infatuated with, but you can't identify momentum in a clear path, guys, you're going to struggle. You're going to suffer. If you don't understand that this area was never broken, you're going to feel cheated when it loses. So you've got to keep it simple, guys. And this is why you have to use the language. And I can't stress that enough. If you're not saying to yourself every time you look at a chart, if you're not being vocal, if you're not scaring the pets in your house every time you look at a chart, if your kids don't walk up to you and say, "Dad, did you have odds favorable momentum? I heard you talking about it." My kids have done that. Once you start to talk to yourself regarding momentum, a clear path, and then say, pull back to an area inside of favorable large triggers, once you can find that entry, guys, you're a chart reader, and you're going to start to recognize patterns outside of the high probability trend trade. If you hesitate, if you're wishy-washy on momentum, if you're not sure about termination conditions, if you're still thinking that it's only a mid-band rather than an area, or if you still think that it's impact with the triggers rather than the area inside of the triggers, or if you're jumping in on the reversal bar instead of waiting for the area inside of favorable large triggers, slow your roll. It's okay to be new. Make it easy. And the easiest way to do that is using this right here, guys. I created this for you. This goes with the section in your spreadsheet called the 101 tab, where it defines strong triggers. I've already given you 38 pictures of strong triggers. Where it defines a clear path, we're 16 deep. Where it defines the entries and shows you what it looks like, we're already 16 pictures deep, guys. Your job, if you really want to be a chart reader, if you really want to be good at this, if you really want to get to where you want to be the absolute fastest, is to go back and take 25 pictures each of strong triggers, weak triggers, of a termination condition of a clear path, of a 50-50 look, because your goal is to never get fooled into thinking it's high probability when it's not. And then go back, circle those tails, and when the rules are met, get 20 longs and 20 shorts. And guys, I'm going to tell you right now, it will be impossible for you to ever mistake strength for weakness. It will be impossible for you to ever mistake terminations with a clear path, and you will have zero doubts about what it looks like to take the correct entry. But I'm going to tell you right now, and I'm not going to judge, 99% of you in this room haven't done this. I've been presenting this for 2 months. 99% of you in this room are still making the same mistakes over and over because you think that taking a trade is how you're going to get good at this, guys. You think that taking a trade is how you're going to get good at it. But if you take pictures with absolutely nothing going on and you point an arrow that says smalls below the large, Paul, posting a trade is how you get good at refining your ability to catch the trade, right? But if you don't know what momentum looks like, if you don't know whether or not you have a clear path, if you don't have any idea what an entry looks like, well, then your trades are just guesses, right? But if you can write, I have momentum, it's not weak triggers. If you can say my path is clear, it's not 50-50, then you're going to find the correct trades faster. And as you begin to go through and piece it all together, posting in the room is what's going to get you the feedback. So let me show you how that works. Let me see if I can find an example, right? Because you're going to make mistakes. I'm not going to lie to you. You're going to make mistakes. And most of them are going to come from not understanding some concepts. So I'm going to do this right here. Because this is a very common mistake. Let me get these off of here. And I'm going to show you something. This is the keys to the kingdom right now, ladies and gentlemen. This is the keys to the kingdom. Should you choose to accept them. Whoops, hold on. Let me get both charts in there, right? We're 2 chart traders. So I need both charts. I need a large chart and I need a small chart. If every time you take a trade, so I'm going to compound on what Paul says. If every time you take a trade, if you draw an arrow to your trigger lines and you annotate strong triggers, yes, I had odds favorable momentum. And then if you draw an arrow to the top of the bar that you entered on, and you put clear path, no. And then if you enter right here, and you put pull back to area. Is everybody with me so far? All I'm doing is I'm going to present my trade in the classroom, and I'm going to say, hey Mark, this was my trade. This is what I did, right? And this is what's going to happen, guys. Every time you post in the room, I'm going to go back to these 3 concepts on your chart if you're taking the high probability trend trade. So I want to do this. So I'm going to say strong triggers. If you said yes, which is okay, I want you to make mistakes, guys. I want you to misunderstand things. But if you said, Mark, I had strong triggers, then my job as an educator, my job as the guy that wants to get you where you want to be, is to go to my picture files and to click on my picture for odds favorable momentum. And what happens is you get a private session in the moment. Hey, and I'm just going to pick a name, don't get your feelings, I'll use Chef. You told me that you had strong triggers here with the smalls inside of the large, and if I go back to that lesson that we talk about every day, you'll notice that when the small triggers work their way inside of the large triggers, what happens is you actually have a weakness there, and anything can happen. So right off the bat, rule number 1's not met. And I won't say, damn it, Chef, why did you take the trade? I'll say, so let's look and see what other advantages we had. And Chef says, hey, look, clear path. And he says, I didn't have a clear path. And I'm going to say, Chef, don't forget, in order for it to be a termination condition, price has to reach the area. And man, it got close, but it didn't. So technically, Chef, you do have a clear path because the triggers are above the 1-to-1s and we haven't reached the next area and you've got room to your targets. And Chef goes, oh man, I misunderstood that one. Thanks, Mark. And then I'll say, so check it out, Chef. You don't have momentum, but you do have a clear path. Let's go and see if the small chart can be a tiebreaker. And this is where I resort to language. That rule 3 says I need to buy a pullback at an area inside of favorable large triggers. And I'm going to say, so Chef, let's go through this real quick. There's my reversal bar, right? That signals the beginning of the pullback. And if this is my synthetic triggers and this is my large triggers, Do you notice that there's no areas inside? And Chef's like, oh, dude, I thought it was pulled back to a mid-band. And I'll say, Chef, your mid-band is on the wrong side of the correction point. And with these weak triggers, anything can happen. Without rule number 3 in place, man, that's exactly what happened, Chef, is anything. And that probably contributed to your loser. And Chef goes, whoa. So you're saying, Mark, correct me if I'm wrong, that if I'm solid on momentum, a clear path, and an entry area, then I have a trade that typically wins 70 to 80% of the time, that I have a trade that creates confidence through the memory of success, that I have a trade that creates a foundation and allows me to see opportunities elsewhere, and I say, oh, Chef, you're using all the language, stop kissing butt, and then we have a giggle. But guys, this is what every trade that you post in the room does, is we go back to your chart reads. We go back to your chart reads and we talk about what you saw and whether you're reading your charts correctly. So I hope that makes sense. If you want to get to being a chart reader fast, use this drill. Fill out your spreadsheet. I'm going to give you guys high probability trend trade checklist, and I'm also going to give you guys the same high probability trend trade checklist with pictures. So here's the printable version, guys. This is the one that you can print out. This is the one that wins more than it loses. This is the one that has you identifying advantages. This is the one that sets you up for success. And I've never had anybody in the history of the checklist do worse than 70% winners. Let that sink in. If your goal is to get paid, this is the one that wins more than it loses. I also have the exact same checklist with what it means to have the rules met. So as you're going back and taking those pictures, guys, you know what momentum looks like and you know what the lack of momentum looks like. Commit the look to the words. Same thing with termination conditions and a clear path and whether or not you have the potential to break. And the same thing with the windows of opportunity. Guys, I'm giving you everything that you need. So those are in the room right now. I just dropped my spreadsheet in the room so that you can go and steal all of my pictures, so that you can study all of my pictures. Guys, over 350 pictures so that these looks become easy for you. I'm also giving you the PowerPoint that I teach class with. So you have access to every picture that I use to teach the room. And then finally, guys, I'm going to give you one more gift. And in my opinion, this is the best gift that I can give you. This is the KISS plan. This is the Keep It Simple Sunshine plan, guys. This is the plan that I've had brand new users in their first 30 days with Nexgen get funded in those prop firms by sticking to it and being patient. This plan is a stepping stone in your learning journey, because if there's one thing that I know for sure is that day traders hate to sit still. Day traders hate to do nothing. But this is a plan that's going to optimize your chances of success with the high probability trend trade. This is the one that's going to create that confidence because you're winning more than you're losing. Oh no, D, I hope everything's okay. Be safe. It's going to be your simulation, your study, your class feedback, your continuous practice, guys. You will be empowered to create a plan that's based on your experience reading the indicators. And that's just a fancy way of saying that once you can read your charts, guys, you're going to see more opportunities. Once you can read your charts, you're going to see different entries. Once you can read your charts, you're going to recognize different patterns. Pete put a beautiful example of that. It's the scare mark to death trade. But Pete's gone back and taken 100 pictures of it. And when we get to it, you'll probably recognize why. But your simple plan for consistency, guys, Pete, you know exactly which one I'm talking about. Never fight the large chart. Never fight the momentum on the large chart. Never trade into those areas on the large chart, right? That seems like a pretty doom and gloom blanket statement. And it is. In the beginning, for you brand new users, I blanket you with the most conservative rules ever. I give you the most boring, mundane, it's no fun making money plan. Why? Because it optimizes your chances of success, guys. That's it. So you have to define your entry. Make it your entry. Your entry is the entry for the high probability trend trade. This is Clara's high probability trend trade. This high probability trend trade belongs to Josh. This isn't Nexgen's. This isn't Cam's. This isn't Malcolm's or Tooth Plumbers. This belongs to you. These are your rules. Surely you want to follow your rules, right? Define your entry, guys. Give me 20 days of getting in at the right spot. Ask a million questions to make sure that you can get in at the right spot. Because great entries create manageable trades. I love that. I'm getting that crocheted into a pillow. Great entries create manageable trades. So your management plan, and it's right here in the client trades, guys. It's right here in pictures on the bottom. It's right here on the bottom. Your management plan should be as mechanical as your entries initially. Why? Because trading's scary, because you're worried about losing. Because if you see little fluctuations of price going up and down, your brain's going to say, get out, get out, get out, get out, get out. But the reality is you're learning to trust your indicators. You're learning to trust your methodology. And you will create a management plan that is completely different from this based on your ability reading the indicators. But in the beginning, everything depends on you getting in where the market is most likely to continue. Everything is dependent on you taking the entry at the area inside of favorable large triggers so that you can put your stop where the market shouldn't go, outside of that window of opportunity, above that correction point. And then once you're in there, there's absolutely nothing for you to do except wait to see if you get stopped out or get a reversal bar. And here's the deal, and Rob, I wanted to touch on, you said, so we wait for a reversal bar. If you are absolutely terrified to enter the market while it's going up, if this scares the crap out of you to the point to where you freeze up, wait for the reversal bar. But there's a cost. It's going to cost you 70, 80, 90 bucks for that confirmation. If you get the reversal bar, you're 2 ticks above it and there's nothing to do. You're either going to get stopped out for a smaller loss, guys, or it's going to hit your first target. And for you brand new users, for you KISS traders, your first target is $100 in the distance. That's it. Only $100 in the distance. Which means that you took the highest probability trend trade. You took the absolute best entry. You reduced your risk, and now you just got paid. And man, that feels good. And there's a gentleman in this room that still to this day takes $100 on his first contract every trade. I typically do it too. I love it. My goal is to get paid. And once I hit this $100 as a brand new user, I'm going to go break even. I'm going to go break even. I'm going to have zero risk on this trade. And what that does is it makes me brave, right? Gives me a set of brass ones, whether it be testicles or ovaries, it doesn't matter. But it allows me to hold for that second target, guys. It allows me to just go, man, I got nothing to lose and I got paid. Let's see if we can get to that $200 target. It's only $200 away from your entry. And guys, this is a small target, but that's a $300 trade. $300, and we did the math earlier on Adriana's, that's almost $90,000 a year, right? So $300 being mechanical, $300 being void of emotion, $300 just learning to read my indicators, guys. This is 20 days, 20 trading days, maybe, just to get you comfortable, 20 days to recognize some advantages, 20 days to optimize your chances of success. That's in the room. And what most people find, correct me if I'm wrong, is that they never get rid of the high probability trend trade. The high probability trend trade never leaves their trading plan because it's so effective. And once you can catch a high probability trend trade, once you understand momentum, once you understand termination conditions, once you can identify that 50-50, the potential to break, I'm going to give you the KISS plan as well for that 50-50 trade, that potential to break trade. Once again, this is designed to optimize your chances of success with the 50-50 as a new user. It's pretty restrictive on entry, I'm not going to lie. But through simulation, study, class feedback, and continuous practice, guys, you're going to craft a plan tailored to your personal goals based on your experience reading the indicators. You might adjust this KISS plan. You might find different reasons to take a potential to break. But in the beginning, your absolute best chance of success says let it be one area that's not broken, not 3 or 4 fibs. Let it come from a termination with no triggers through that reverses the market. Guys, this is the one that I'll never do without on a 50-50 trade. You need to have momentum on the large chart and the small chart. Small's outside of the large, because if I'm not with a clear path, well, then I'm not going to sacrifice momentum. And notice that it says no divergence on the 5-1. No divergence on the 5-1. No loss of momentum on the 5-1. This is one of the biggest killers of 50-50 trades. But if this is all yes, get in. And then it reminds you that if there's divergence, don't take the trade. Why? Because you're going to lose more than you win. And this is designed to optimize your chances of success. And now here's the deal, guys. It's not a high probability trend trade. This isn't a trade that typically wins 70 to 80% of the time. This is a medium probability trade. This trade has to be managed differently. So I'm still going to use the window of opportunity. So I'm going to make sure that I have the least amount of risk possible, guys, because it's a maybe trade. I'm not going to put $300 worth of risk hoping that a fib breaks. So if the risk is too much, I might elect not to take it. I'm still going to use the reversal bars. And then I'm reminding myself that if divergence prints, this kills trades more often than it doesn't. I'm going to GTFO. I'm not going to hope or wish or want. I'm simply going to get out. And then quick profits on the first, quick profits on the second, wait for the next trade. So I put that one in the room as well. Guys, this is my first hour every day. This is my first hour, hour and a half every day. I say the same thing every day. I talk about momentum. I talk about termination conditions. I talk about haven't reached the area. Smalls are above, large are not. But I'm not from a good top or bottom. This doesn't fit my KISS plan. So guys, I'm going to take 5 minutes. I'm going to go stretch my legs. You can watch crude oil. When I come back, we're going to go back to your charts. We're going to do the same thing we did with Adriana's. We're going to talk about momentum, a clear path in an entry area. The one thing I need you guys to do is tell me why the hell you did what you did. Tell me what you saw. Let's become a chart reader together. And when I come back, we'll start looking at it. See you guys in 5. difficulties. So while those come back up, we are going to go through the pictures that were posted yesterday. So I want to go through what we did. I'm going to click on a few of them and kind of run through so that I can be back down looking at the chats and making sure that I answer questions. I responded to a lot of these in the room, but I want to make sure that we get all the lessons out of them. So I'm going to load up all of the pre-class questions. And here we go. So I'm going to jump down to the bottom here. Guys, if I ever miss one of your pictures, if I ever miss one of your questions, if I don't answer it, please make sure that you let me know. I never want to intentionally miss anything. So we're going to start right here. Paul says, not termination potential, Paul. This is a termination condition. And then I love that you did this. Notice that he points the arrow at the large triggers pinching and rolling. Just a termination, and now it's a strong bottom, which means this 50-50 is more likely to work. Paul has odds favorable momentum. Best look ever. Absolutely no divergence, and it pulls right back to that fib, right at those triggers. What an easy trade. Paul, absolutely beautiful textbook. I'm not sure you could do that any better. That fits the KISS plan 100%. I actually think I want to steal your picture, if that's okay. And I want to drop it into my spreadsheet because, guys, right now, I'm trying to learn how to do the basics. Right now, I'm trying to figure out what it looks like to have the correct 50-50 trade, to have the correct high probability trade. So why not steal his, right? I would encourage you guys to do the same thing. Everything that gets posted in here is open game. So Paul, perfect, 100%. Jonathan says 2 trades is an experiment, no worries. But Jonathan, over here, guys, Nexgen teaches a momentum trade. You guys have created a jump-in trade. Nexgen teaches a momentum trade that says when you have odds favorable momentum on both charts, when an area has the potential to break, let the smalls break and sell a snapback to the fib or 1-to-1s. Jonathan, this is a momentum entry. This is the momentum with the least amount of risk. This is the momentum that you just stay in until the momentum is gone. And I think that is the challenge. That is the challenge. It's probably still on my... There you go, Joel. The challenge, guys, is you have to understand what you're getting into. And Jonathan, this is such a beautiful trade. The entry is 100% perfect. But I asked the question, if you're in it at 57 and it runs 10 points and hits a fib, get paid at the fib. Don't get paid at the mid-band inside of favorable large triggers because that's the entry for a short trade. Get paid at the fib. And then re-enter on the high probability trend trade. And guys, the better you get with reading your indicators, you'll start making quick decisions like that. But you'll realize that you're going to feel this tug that says, hey, hold on, what if it goes? Let it go past the blue fibs. Those fibs aren't going to hold. Hold on to that trade. Jonathan, you absolutely nailed the entry. Take an exit, regroup, get back in. Great trading, dude. Beautiful, beautiful job. And then Joel, odds favorable. Not a clear path because of the 50-50, no divergence, perfect entry. Joel, easy money, right? These are the ones that are effortless, guys. These are the ones that you almost feel guilty how easy it was to get paid. And then you get weak triggers and not a clear path and no areas inside of favorable large triggers, and you get stopped out because it pushes deeper. Notice how it's not momentum. And then Joel, this is where I want to remind you guys, I can never, ever, ever, ever in a million years have a 50-50 look, have that thought process in my brain, this area has the potential to break, unless it's got some momentum behind it, guys. Weak triggers at fibs reverse the market. So this is one of those ones where I just go, man, if it's going to break, it's going to have to break without me. My advantage is gone. I don't have momentum. I don't have a clear path. I don't have areas inside of favorable large triggers. And this is that one, guys, I'm guilty of it too. This is the, man, I sure hope it goes. I sure do hope it goes. And it didn't. All right, let's see what we have here. This is Paul, right? Paul Flowers, you with me in here? Hope floats. So does poop. Paul says, potential to break, odds favorable, no divergence, mid-band inside of triggers, and you waited for the reversal bar. You did the stop order, but it's only 50-50. So you get out, break even plus a tick, you got paid at trouble. Paul Flowers, beautiful execution. Trading with direction, trading with momentum, trading without divergence, with strong triggers from an area. So many things right with this trade. Awesome. And then we get into the what the hell are you doing, Paul Flowers trade. And this is a misunderstanding of a lesson. There's no doubt in my mind. No, it's not a problem. It's a misunderstanding of a lesson. And I'm going to show you how easy this is to fix. And what sucks is you got paid on this one, which is encouraging bad behavior. So you said it's a 50-50, right? Which means that because of this momentum, this area has the potential to break, right? So let's just go through this, Paul. What direction is the market going? Up or down? What direction is the odds favorable momentum? Up or down? Are we expecting the area to break to the upside or to the downside? And I'm only doing this because I want your brain thinking this way. All right. What direction is the small chart moving? Down. Small triggers down outside of the large. That's odds favorable momentum. No, dude, they're down. There's your entry bar. Do you see it? Everything on every chart says this market's likely to go down. And then, Paul, you heard in the room, well, use a reversal bar for confirmation on the right side of the triggers, right? Exactly. But your rules still have to be met. And Paul, I know that this is an easy fix, and I hate that you got paid on this one. But that kind of goes back to divergence kills a 50-50. You gave up the advantage of trading with the trend. You gave up the advantage of having any momentum, and rather you created a huge disadvantage of fighting it. It's okay. I got to stress this. I love this picture because it's such a good lesson. So Paul, when we're talking about using a close on the correct side of the triggers in NASDAQ, what we're talking about is I'm looking for a short trade because the trend is down. And I'm looking for a short trade because the momentum is down. And I'm looking for a short trade because it has the potential to break. And I'm looking for a short trade because there's an area inside of triggers that suggests more down. Does that make sense? But this is the NASDAQ, and when these triggers are coming up strong, I want to see a close on the right side of them. Otherwise, the market is likely to continue up. So you did have the close on the correct side of the triggers, but this is a hugely aggressive counter trend trade. Hugely aggressive counter trend trade. I don't know what that means, Elvis. His entry, there was zero indication. No, you can't speak. Not in this classroom. Nobody. Sorry. There is zero indication of divergence. Divergence happens 3 bars later. So this divergence doesn't even exist yet. This divergence wasn't a thing until right about there. Which means that this looks like a momentum to the downside, selling the breakout, going out. Everything says down. Now, when this divergence prints, I don't know what you're saying. When this I can't even see a pivot over here. Elvis, I know you have a different plan, right? You have a different plan. Elvis, this is a termination condition right here. That's all it is. And it's a termination condition. And the market's going down, and there's momentum, and there's the potential to break. So if I have a pivot stop out up here, even more so, I can't see his chart. So check it out, Elvis. I know what you're saying. If I have, because I can't see, I have to, if there's a pivot down here that got me up to this divergence, the expectation is to take out that pivot. I think that's what you're talking about, right? When you have a pivot stop out here, very often it creates a pivot stop out below it or above it. But I can't see where the previous pivot was. If the previous pivot was right here, it did what it was supposed to do. Buenos dias, Cindy. Does that make sense, Elvis? Without being able to see the previous pivot, who cares? It's still odds favorable momentum. Elvis, write down the rules for what you're talking about. Because I'm not sure if you're talking about a pattern that revolves around divergence. I don't know if you're talking about a pattern that suggests a long trade. No, there is no return to, I've never heard of that. You can teach it to me in the other room after class if you want to. You can message me with it. I have never heard of a return to divergence. Unless divergence prints here, then perhaps, but there's no indication of any divergence at all here. Everything suggests down. There's not even the potential for divergence on this chart. Does that make sense? I do know what you're saying now. So what Elvis is saying is that when you have divergence, let me create a little fictitious divergence line. That if divergence printed right here, guys, right off of the bottom, a lot of times that divergence will take out the previous pivot. Is that what you're saying, Elvis? If divergence prints off the bottom, we expect it to take out the previous pivot. Every lesson is important, so I want to make sure that I'm understanding. I got really confused for a second because the only divergences I saw were up here. Is that where you were going with it? Because that's an awesome lesson, right? That's pattern expectation. That's chart reading. I like that very much. But the challenge is that there was no divergence, or there was not even the potential for divergence here. So that pattern is a completely moot point. I don't know anything about recollections of previous divergences. I'd be curious to see 10 or 15 pictures. Show me the pattern. I love patterns. But Paul Flowers, does that make sense, how you fought everything? And then right here, it's the same thing. You're fighting odds favorable momentum. and just misunderstanding the lesson, right? And momentum pushes it right back up. This one had a better chance of winning. At least it had a termination condition behind it. But I think that we may have cleared it up. And I love that you said never trade against momentum. That you did there. And that's cool. It's fun. These lessons are great. I love these lessons. There are so many good ones. No worries, Elvis. All we were talking about was his entry at the bottom. You've got a lot of great trades, Elvis, that revolve around counter trend, that revolve around larger chart patterns. This one, all we're doing is discussing an entry long when everything says short, and not enough information to suggest that the market was going up yet. The same way there wasn't enough information to suggest that the market was likely to go down yet. That's all we're saying on this one. And then Rob gave us this great lesson. He's like, man, we're at a termination. There's weak triggers. Probably a reversal coming. And it was an awesome lesson on how when these large triggers are still pushing through an area, very often we're going to retest or go higher because these are the large moving, slow moving average. And you see that a lot, guys. When the large triggers are up but the small triggers are down, you typically get to go with those large triggers. And that's why we wait for them to pinch and roll to create that strong top or bottom. Rob, awesome picture. And then Joel, we've got a weak top, odds favorable momentum, potential to break. It's a 50-50 trade, right? No divergence, perfect entry, quick profits. Divergence on a 50-50 is typically the deal breaker. You know that, and you take your exit. And then Joel, this is an amazing 50-50. Great look. And I'm going to put this one under management because this is how you manage a 50-50 trade. You allow divergence to take you out rather than hoping that it just continues to work. So I'm stealing this one. And we're going to put this under management, though, not even entry. Because I want to learn how to manage my trades as well. Nicely done. And then as we move along, Paul, Paul had a clear path, took the entry, got paid, and he got out with a divergence. Because it's a bad top. It's a weak top. It's not coming from an area. And Paul knows that when it's not coming from an area, the mid-band could hold. Nicely done, Paul. And then here's the same trade again. Joel, the exact same way. There's that Paul or Joel, odds favorable, but you do have a clear path. That mid band is the first bounce point, but technically it's not a termination because the triggers aren't a full bar away. You take the perfect entry. Looks like you got paid, got back in, got paid, and then got out break even. Did it twice, pushed the stop too tightly. Oh, okay. Move that stop just a little quicker than you needed to. Nicely done, guys. I'm going to scroll up and let's find some more things to talk about. Paul, did that help you out with the idea of using a reversal bar when the rules are met? And then, Paul, those were just you making sure that your data was right. And then Mr. Flowers. Odds favorable momentum, the larger red, the smaller green. Definitely not. Trading directly into a termination condition once again, no momentum. Let me see where your entry is. 1977. So you're going long on a little pullback into all. At least you're trading with direction. So Paul, big difference here, right? You're still trading into termination conditions. You don't have areas inside of favorable large triggers, but you're like, man, it may come back to the synthetics. That's good usage of the reversal bar, Paul. That's how you do it. You're saying this is a good bottom, right? Maybe this will break. My entry's not clearly defined. Let me wait for a little bit of confirmation, and then I at least have a fighting chance. So Paul, this is a much better usage of the reversal bar. You're trading with direction. You're going with the immediate momentum. And you're putting a couple eggs in a basket regarding this area holding to continue up. Does that make sense? You see the difference? Trading with direction, trading with momentum. That's how you keep from getting run over at the mid band, at this fib, at these 1-to-1s, and all of that. So nicely done, dude. I like it. Scrolling up. Scrolling. I think it's heartburn time. Here we go. Pete's up. We got 3 of them, Pete. We'll go to all 3. I'm going to pull the load off my computer a little bit here, because I just don't trust Discord. All right, Pete, let's see what you did. Let me scroll back to the bottom so if we need to. Pete says, I have strong triggers coming off of a termination, and you're getting in right here. And Pete says, you know what? That's a termination condition. I don't have a clear path. He uses his chart reading to understand challenges. I love this. Because before Pete ever looks for an entry, Pete knows that he's coming from a strong bottom, which increases the likelihood of that up movement. Pete knows that he has the best momentum ever, which means that it's hard to stop that moving train. And Pete says, dude, my path isn't clear. Let me make sure that my risk is minimal. And he takes the pullback right to the mid band, and he rides it up to the 1-to-1s. And it's just a quick trade. Really well done, Pete. Trading with direction, trading with momentum, willing to take a chance via chart reading based on what you see. I think this entry is even a little better because it hadn't hit yet. And then here's Pete's heartburn one. The market has been trending strong as the day is long, smashing through areas. And when it gets to this fib, Pete goes short. Ugh, where are my Tums? Guys, we've talked about this one. And more than anything, I just want to go, Pete, why? But Pete's like, Mark, it's cool. This is the Pete bounce trade. Didn't fill on Ninja, but it didn't trade-evade. It's a big long up into a big fat fib, the BFF. And Pete says, you know what? I can win this one just enough with virtually no risk, because it usually gives some bounce at such a high time frame. Guys, this is anti everything that I teach in this room in the first hour. This is the stuff that you pull off when you become a chart reader. This is the stuff that you pull off when you take 100 pictures. This is the stuff that you pull off when you've seen the pattern over and over and over. And man, it's nothing that I teach, but this is Pete's trade. It's called the Pete bounce trade. But the thing is, if you try to do what Pete does, oh, he's short before they ever pinch Elvis. He's getting in right at the top right here. This is 100%. And I know because I've talked to Pete about it. This is 100% entry order 2 ticks below before anything blinks. Terrifying. This is as counter trend trade as you can get. But patterns repeat themselves, and that's one that Pete's recognized. And Pete says, I know that that's risky, and it doesn't happen all the time, but check this out. With momentum on both charts, clear all the trouble, let me hop in, let me get out of trouble, make a little more cash. This is becoming in tune with your trades, guys. This is becoming in tune with your charts. This is finding a rhythm where you and the market are dancing, and it works well. And Pete, you've really put it together. And all of your trades look the same. Every one of your trades. Well, I mean, you've got 2 or 3 different trades, but they're all executed the same. And the biggest thing, Pete, and I gotta say this, the one thing that makes me just giddy is that you get paid. Like, it's like every time you enter the trade, it's almost as if you say to yourself, the goal of trading is to get paid. Let me not hope that areas break. Let me not wish that things would change. Let me take a beautiful entry and let me take a logical exit. So everything is up. It's a 50-50 and it pulls back. Got in a little late, but with all the advantages, and you ride it right up. 95, is that 95? So you even took it through the 1-to-1s because the momentum was outstanding. And then you said, when divergence prints, let me get the hell out. I mean, really nice, Pete. Really nice. And yeah, Elvis, he uses that major fib, and that's just a part of his plan, and it's pretty cool. One thing about this room, guys, is you're going to see other people doing things that don't make sense. And one day it's going to click and the lights are going to come on. You'll be like, wait a minute. That totally makes sense. Oh, D left the room, but we got to open that one. And then Jonathan, let's see what you did, my friend. Jonathan, everything is up. You take a little snap back, didn't make areas. Not strong triggers, weakened triggers. Not quite a clear path, but almost. Let me read your annotations here. 3 triggers through, 1-to-1, path to next is clear. Small chart trigger strong. Got out too soon, was looking at the divergence line. Price was moving slowly, bad habit. I don't know. Advantages. You didn't have odds favorable momentum either chart, Jonathan. Are you in here? And guys, sometimes I'm going to do this. Guys, please don't request to speak. I'm not gonna let you. I'm not gonna give you the microphone, no matter how many times you guys ask. So Jonathan, if the small triggers have worked their way, both of them inside of the large triggers, can we agree that this is weak, not strong? And that's okay. We're just going through it, right? And if the large triggers haven't made it through the 1-to-1s yet, then it's not a clear path. And if my areas are down here, I don't have areas inside of favorable large triggers either. So I feel very comfortable saying that this is not a high probability trend trade. Divergence is also a loss of momentum. Small triggers inside of the large are also a loss of momentum. Can we agree that you jumped into a trade without the advantage of momentum or a clear path? Not knocking it. This is your trade, guys. You can do whatever you want. That's the beauty of trading. It is very much an individual sport. But what is the likelihood that this is going to win more than it loses? What is the likelihood that losing momentum into areas and jumping in without a solid entry is more likely to win than not? And this is what you have to kind of calculate. Do I want this look to be my trade, or do I want this look to be my trade, right? Do I want this look to be my trade? Do I want something that if I take it 50 times, I have a better chance of winning than losing, right? There's another 50-50, not from a good bottom, divergence prints, and it loses. Everything is statistical advantage, guys. Everything is patterns that repeat themselves over and over. Jonathan, everything says up. Your triggers are up. That market's cranking, right? You took a chance and you jumped in at a trigger. And you knew it probably wasn't right, because you exited before it even did anything, which is okay. This quick exit kind of denotes a fear in the trade. It means that you're not comfortable with what's going on here, even if it's subconsciously. And we tend to jump ship early if we feel like we took the wrong trade. So good stuff, Jonathan. I think a lot of good lessons in there. And then the flip side is that short that you took early, that beautiful momentum trade. Did you notice how you even held that one too long? Because you knew it was a good trade. You knew it was a solid trade. You were like, man, wild horses couldn't drag this market the other direction. And you actually held on to it longer. And guys, this is why I say, if you go back and you ask yourself what feels easy and keeps you relaxed, and what feels forced and made you nervous, Jonathan, would you say that when you have all the advantages, and you can read your charts well enough to find them, when you have all the advantages, don't you feel a little more relaxed? Aren't you willing to hold a little bit longer? But when you know you're trading without momentum, when you know the path isn't clear, don't you find yourself going, man, I've got to figure out where to protect myself because things can go south quickly? It happens. I know, because I've done it. Guys, there's nothing that you guys will ever do that I haven't already messed up in some form or fashion. I promise you. Which is why I'm so quick to answer when I see something. Or as Paul pointed out, that's why I'm so quick to be able to find the pictures that go with the lesson so fast. All right, Paul, let's see what happened. Great top, 50-50. Paul says with a great top on a 50-50, I'm getting in at the top of the window. I'm getting in closest so that it's lower risk. Notice that Paul has split triggers. So he's only got a tiny little window of opportunity. He takes the trade. He makes quick profits. And he's got it 2 ticks above the reversal bar. Actually, you've got it 1. 2 ticks would put you in a place to avoid or have time to react to divergence. But Paul, it's beautiful. Strong tops. Odds favorable. Potential to break. Perfect entries. Even if this one didn't work, and I don't know what happened, even if this one didn't work, you made more than you lost. And if you make more than you lost, it's hard to not be successful every day. All right, weak top, 50-50, odds favorable, no divergence, perfect entry, stopped out inside of the correction point. Dag-nabbit. Get back in, and then divergence messes up your good time, stopped out inside of the correction point. And then, yeah, I guess you could have. And guys, this is why 50-50s are challenging. Does anyone remember when I made that silly comment at the beginning of class where I said that the people that control the market, the people that are in charge, the large crowd is going to react at these key areas. The large crowd is going to react at these key areas. So what's a 50-50? It's putting you right in the middle of that reaction point. And look what the market does. Sometimes the buyers win, sometimes the sellers win. But you have to expect this nonsense. And guys, the more fighting there is, the less likely you are to hold a trade and win it. Sometimes there's so much momentum and the sellers are so hell-bent on taking over that it's quick. If your 50-50 isn't quick, it's probably going to go south. Look at your small chart around this fib. Very much so, Paul. Look at the small chart around this fib. Up, down, up, down, up, down, divergence, divergence, triggers roll. All of this, guys, is happening right here at 81.55. Every bit of this is right here at the decision-making point. This is where fights happen. You don't have to be in that fight. You don't have to get caught in that fight. So, Paul, let's go back to just the very basic entry rules, if we can. And this is another time, guys, when I talk about entries, when I talk about entries on my large chart, I expect price to return to the large triggers, right? Is everybody good with that? On the large chart, price returns to the large triggers. On the small chart, price returns to the large triggers. So this right here represents where I expect the market to correct to. Any stop placed. No, you're okay, you're good. Inside of the correction zone, we'll call it, is chum for the sharks. So any stop placed inside of these triggers where I expect price to return to, very much so. So Paul's question was, if I had put my stop, ooh, that's the wrong one, but I do love a little heart-faced emoji. Let me go back to this one. So Paul, if you had put your stop initially where the market shouldn't go, you would have probably made your $100, right? Are you not willing to risk that much on a maybe trade, Paul? And I get that. You're like, well, that's just too much risk. I'm not willing to risk that much. And then Pete just said it. Then don't take the trade. Because arbitrary stop placement in the correction zone gets hit. Stops are not a number. Stops are not an arbitrary number. Stops aren't 10 ticks or 12 ticks or 14 ticks. Stops aren't 5 ticks or 7 ticks. Stops are where the market shouldn't go. And that's hard, Paul. So let's try this, though. So, Paul, let me make this bigger. Because, guys, I try to have solutions. The market's coming back, right? And you're like, this is my entry. This is where I need to enter. But your brain says, Paul, your rules say that your stop has to go up here. And the brain says, no dice, Paul. Can't do that much risk, right? So what if we talk about reversal bars for confirmation, right? We talk about those reversal bars for confirmation. So Paul, once you get a reversal bar in the trade, can't you put your stop 2 ticks above that reversal bar? So now you know exactly what your risk is going to be. You enter off of there, but you still got divergence on a 50-50. So you might have exited anyway and still not really made any money. Or you say, there's your stop. It wouldn't have got hit here either. And then it might have gone down. And if you held the trade, there's your next stop, right? And then it comes down. And then the high probability trend trade. Down here, I like it. It's weakening triggers, it's weakening triggers, it's a clear path. And here you put your stop even beyond the correction point. This one could have been less, Paul. You left this one at 10, do you see it? This one could have been probably about right there, about 4 ticks above. And this is why having a plan, guys, a plan for stops. And that's one of the reasons that the KISS plan talks about putting your stop where the market shouldn't go. That's why when you're holding for bigger moves, if you're going to try to hold this all the way down, your stop has to go where the market shouldn't go. You have to understand that there are, in fact, fluctuations, that there's a lot of up and down on that small chart. And if your stops, it's like they have cameras. It's like the people that move the market say, okay, a lot of people are going to go in here at this mid band, and they're going to be too scared to hold beyond 8 ticks. So let's go stop them out and take their money and then start moving. It'll be fun. And then when we start moving, they're going to jump back in. but they're still not going to be willing to risk much. Let's go stop them out a second time just to piss them off. And then down here. They know exactly where your stops are, guys. Which is why I teach exactly where the stops should go. Cannon, let's look at it and make sure that we did, though. So, Cannon, this has nothing to do with a clear path. If we're looking at the triggers, are you with me, Cannon? So I'm going to use your chart and I'm going to make this into a lesson for everybody. I hope you're cool with that. So when somebody says, hey, Mark, what do you think about the large triggers leading the small triggers? No, nothing to do with it. Let's go to rule number 1 first, Kenan. How's that? Let's keep it super simple. Rule number 1 says that I have to have strong triggers. So the only way that I can have strong triggers in an uptrend is if my small triggers are above the large triggers, if the large triggers are wide, and real importantly, Kenan, if the background, the large triggers, and the small triggers are all the same color. That's the only way I could ever have momentum. Is that cool? Same thing in a downtrend. So my large triggers can never lead the small triggers, because look at this. My large are green, my small are green, but my background's red, which means that my small are on the wrong side of my large, so I already don't have rule number 1 met. And then we go to clear path. Smalls are below the fib, large are above the fib. Not a clear path, and the only thing that I ever expect to break a fib is momentum. Pretty cool, right? How the very simple process of taking the basics, right? Momentum has the potential to break areas. No momentum, oh my gosh, absolute cluster, foxtrot, Charlie going on right here. Does that make sense? So always start with momentum. And if you don't have it, it's tough. It becomes more difficult. Because momentum is what pushes the market. And when the momentum is absent, you're relying on, I'm not even sure what, to push the market. All right, let's see where we're at here. Pete, we got yours. I can't remember. Hold on. No, I think not. Paul, did we get yours? We did. This, hold on. Yep, okay, we got yours. So, Pete, we're on to you, bud. Directly into a termination condition. The Pete thing. No divergence. Tiny window of opportunity. So check it out. Trigger strong separated, odds favorable. This one was 50-50. This one was a termination condition. And guys, I'm going to tell you, when you start weighing out advantages, you're going to find opportunities to break your rules. And I'm not saying that it's the right thing to do. But one thing that Pete does, every time I see him successfully trade into a termination condition, is he has the odds favorablest momentum ever. And he has no divergence and strong triggers. And he's taken the smallest risk entry possible. And then once he's in, he's seeing if that momentum does its thing. Nice job, Pete. Odds favorable, not a clear path. Low risk entry creates a manageable trade. Jonathan. Dun, 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 dun. Jonathan, everything says up, you clear the trouble, you just jump in, and you exit with a loss of momentum. Jonathan, I don't know if you're in Texas, but I want to hug your neck right now because, dude, that's how you do it. Take that picture, repeat that every time, Jonathan. You're too good at reading charts now. Make it mechanical. That was awesome. And who is this? This was Pete. Termination reverses the market, odds favorable. Let's get in on the pullback and let's make money. Beautiful. No triggers through termination reverses the market. This market's more likely to go down. Pullback right to the area inside of triggers. Beautiful. And man, you hold that thing. Pete, out freaking standing. Joel, let me see what you did here. You tried the short. Didn't work. That's okay. Odds favorable, clear path. They can't all win. But Joel says, you know what? When the shorts don't work, when divergences print, when everything rolls, let me take a momentum style trade. Right off the smalls. Smalls break through, pull back, and let me capitalize. And Joel, that's freaking amazing. What a beautiful trade. What a great recovery. Haul in the mail. I like that. All right, Morgan. Bad bottom, odds favorable. Divergence wasn't here when I took the trade. I like that. It won't be. Large trigs were almost through, but that doesn't matter because it's still a 50-50 until you break through. I think that's where you went wrong here. All right. Have I told you guys how much I enjoy talking about your charts? Because I think that there's inadvertent lessons always. All right, so Morgan, let's do this first. Beautiful. Rock star momentum, right? We're 50-50 on these one-to-ones. Does that make sense? I don't think you put these one-to-ones into the equation. I think you were really focused on this fib. It's a different area, right? Price reached it, triggers didn't break. You were focused on the fib because you're like, man, if we just get past here, here I go. This divergence right here, this didn't print, Morgan, until all the way down here. This divergence right here didn't print till all the way down here. But what happened is you had a 50-50, and you still had a 50-50 here, and you had a bad bottom, and you had divergence, and you took the trade, and you got slaughtered. So even if those one-to-ones weren't there, it was still a bad bottom 50-50 with divergence. Does that make sense? So I'm going to do this real quick. And this is for everybody. This isn't just for Morgan. Dun, 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 dun. And just for poops and giggles, we're going to pretend that that one-to-one wasn't there. And I want you to see, I want you guys to see how easy it can be once you know your rules for entry. So watch this. Was it from a strong top or bottom? There's our first no. Odds favorable 13, that's a yes. Smalls outside of the large, that's a yes. No divergence, that's a no. So eventually your brain will go to this place. And Morgan, yours is getting really close. Your brain will go to this place where it literally says to itself, I'm not cool taking a trade with 50% of my advantages gone. And you almost never take this trade because of that. And I said earlier, and not that what I say is gospel truth, but my absolute 100% must have on a 50-50 is I want a strong top or bottom, or I expect them to fail. I just expect them to fail. They don't all fail, but I expect them to fail. And I won't take a 50-50 without a strong top or bottom. Give me a strong top or bottom, I'll take it with one divergence. But one divergence and a weak bottom, you couldn't pay me to pull the trigger. Does that make sense, Morgan? So you got a little focused on the fib, but Guys, it's your entry chart. It's your entry chart that's going to really let you know if you should be taking that 50-50 as a brand new user, and you'll grow outside of it a little bit. But that is the most lost trade. And then, Kenan, we saw that one. That was your question about the triggers. So let's go to Paul. Posted a question on your 13-2 chart. Large triggers have rolled long. Oh, they never even changed. So, Paul, they never even changed, right? Not only did you pull all the way back, but your large triggers couldn't even roll. I'll call this a strong bottom all day long. But it doesn't mean that you have a trade, does it? Because the smalls are below the large, because the area is not broken. So yeah, absolutely. So when your rules are met, and they're still not, yeah, I love this. I love everything about it. But I still don't have any rules met. Good question. Great question, Paul. Thank you. Isn't it kind of cool how every time someone posts in the room, all of us seem to get a little bit smarter? Even me sometimes, guys. Andrew Z, were you eavesdropping when we talked about weak bottom, 50-50, divergence kills it? But I know that you're still pretty new, Andrew, so let me do this. Let me celebrate 100% that you identified momentum. Let me celebrate 100% that you know exactly where your entry goes. All you need to do is work through that 50-50 concept a little bit. Kenan, have a good one, man. Thanks for being here, bud. Does that make sense, Andrew? The triggers are outstanding. You picked your entry spot as well as Morgan did, and he's been here a lot longer. But that 50-50 look, that not quite broken look, and then that divergence, guys, I'm telling you, when you're brand new, I love these 50-50 looks. If you don't think it's a 50-50, then yeah, Andrew, you nailed it, 100%. And so I like to celebrate victories, especially with you new guys, because a lot of you are a lot smarter than you give yourself credit for. You know exactly where the entry comes from. You know exactly what the triggers can look like. So now, every time you go to take a trade, you're probably going to ask yourself, did price reach an area? Did both triggers break through? And eventually, you'll never get caught on that again. Nice job, Andrew. Thank you for posting, man. I know that takes courage when you're new. Stop you talking about. What kind of trade are you in? Where the market shouldn't go, Jonathan? Jonathan, I have to be completely honest for a second. I'm starting to get pissed off because you took the perfect momentum trade again. And when the momentum failed, did you know that it could turn into a trend trade, so your stop has to go where the market shouldn't? You're killing it, Jonathan. Everything that we've been talking about and scrambling our brains on for the last couple weeks, just trying to piece it all together, you're freaking nailing it. Nice job. I love this. This is the high point. It's okay. We're still going to make mistakes, but what this means is that repetition creates recognition. Repetition creates understanding. I love it. Guys, I don't take perfect trades every time. I still mess it up sometimes. But just like Jonathan, his trade shows that he understands the concepts and he's working on it. Steve Diego, working on posting your trade, but your covered wagon computer crashed. New computer to be delivered. Right on. Odds favorable, clear path, pull back to resistance. Out of the pink 1-to-1s. Also happens to be the mid-band from the middle of nowhere. I love it. Even though it still went down, it's hard to get mad about that. Nice one, Steve. Very nice one. All right, Adamos. That's okay. That was a good one for the stop. I like it. All right, Adamos, I'm trying to click on yours. Give me just 1 second. We'll see if that comes up. If not, guys, I'm going to have to do a little reboot on Discord to see if we can make it happen. So I'm going to give that a second to see if it comes up. I'm also going to try to copy the link and see if I can post the link in here. Haha, nope, that goes back to Joel's, and I don't know why. Hold on. No. Adamos, I'm going to have to go back and get it and look at it. I apologize. Guys, sit tight real quick. I'm going to do a quick Control-Alt-Delete and kill Discord. Usually that lets me come back and click on these ones that don't have links associated with them. And I don't know why Discord is doing this lately, but they're making it challenging to click on anything that you guys copy and paste in the room. Usually you guys can still hear me when I do this, so la 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 la. Steve Diego, just going back to your picture, man. Momentum and a clear path. What an awesome, awesome combination. What an amazing combination to create effortless trades, even when it's not really flowing great right at that mid-band. So good stuff. There is an alarming absence of fibs there. Come on, Discord. I'm trying to get up, guys. Still coming up, guys. Be right there, I promise. I'm assuming you guys can still hear me. That microphone is usually still hot. Education room, pop it out. Let me get a screen up real quick. You guys still have the audio, right? All right, here we go. Here we go. All right, Adamos, let's see if we can get yours up. Fingers crossed, guys. Son of a bitch. I refuse to be beaten. There it is. I was going to blow it up in chat, take a picture of it, and blow it up again. We got it. Here we go. All right, so bad top, 50-50 on the divergence low, perfect entry right at the mid-band, profits at trouble. Adamos, this is beautiful. I hope you're in here. Absolutely stellar. Medium probability trade, perfect entry, out at trouble. Nicely done. Jonathan, you say 3 trades. Everything says down, it's easy, you get paid. Everything says down, you get in. I don't know why you got out. I'm not sure why you got back in. But the stop makes sense. And you take it down to trouble. Jonathan, I like it. This one, I don't know that I would have re-entered, right? Let this one, if this one doesn't go, grab hold of that trend trade. Dude, Jonathan, solid, man. Really nice. All right, Paul, a PSO at prior divergences. Do the trigs have to stay above the PSO divergence to be a termination? What if they overrun the PSO by a bit? All right, so let's go find a chart example, Paul. I know exactly what you're asking. Let's do it. All right, here we go. Whoops, make it nice and big. So here's your first divergence. Guys, is everybody good with the idea when the market goes down, the market goes up, if there's a loss of momentum, we're going to see this divergence. And this divergence is a line in the sand. This is the exact number where the buyers told the sellers to go to hell, we're taking over. This is the exact number, 100% super specific. And it creates this cyan line out to the right. When the sellers come back, when the sellers are like, hey, jerk faces, we wanted to go down, and they reach that line in the sand, and it happens on this bar right here. When the triggers stay above it, Paul, it's a termination condition. Does that make sense? It's a termination condition before it's ever a pivot stop out. And how that works, and this is a better example. Price reaches the divergence low, the triggers stay above. It's a termination. Is everybody okay with that? Let's talk about how pivot stop outs are created. Where do pivot stop outs come from? Right here, specifically. Whoops. It's a termination. That's okay. You were managing a trade, Jonathan. So now it's a termination. When price trades below and back above, it's a pivot stop out. If the triggers stay above that termination condition, it can be a strong bottom. Does that make sense, Paul? And everybody? So first, it's a termination. When it trades below and back above, it's a pivot stop out. If the triggers stay above it and it rolls, then it's a strong bottom. Jonathan, there's a million coulds, right? So work with what your rules have right now. And right now, Jonathan, on your picture, celebrate that you understand where the market shouldn't go. That's your victory in that one. That you understood where the market shouldn't go, that you made your stop appropriate because of it. And then eventually, you won't be so wound up in the moment that you take another entry, that you add on a contract. The one that you took off, you put back on, right? But in the moment, let's celebrate the idea that when your momentum trade failed, you knew that it could become a trend trade and you put your stop in the right spot. The other thing is if the trend trade fails, are you willing to lose nearly $300 on a failed momentum trade? Or does it make more sense to lose $50 and see if the trend trade sets up? Does that make sense? So there's going to be options. There's always going to be options. Gary, termination, triggers don't match, no clear path. I love this. Gary says, my indicators tell me when it's garbage and he's identified what has to happen to take a trade. Guys, these trades are brilliant. Gary, nice day. These pictures are brilliant because these pictures, Gary could be trying to create a trade, but rather he's taking pictures of why he's not willing to risk his money. Gary, virtual high five. Nice job there. Patience is the hardest part. Tom Petty said it best, guys. The waiting is the hardest part. All right, Paul, another question. Once divergence posts on a 50-50 and the exit is taken, and the rules say you cannot take the next reverse, I don't have any rules that say that. I don't have any rules for when you can re-enter a 50-50 trade after the rules are broken. I've never created them. But Paul, you're absolutely right. When the small triggers and the large triggers break through the divergence, that divergence is in the rear view mirror. And if you get a pullback to an area inside of favorable large triggers without divergence, technically that's a rules-based trade. I think you answered your own question. Absolutely. Man, we made it through, guys. We made it through all your pictures. We've made it through all your questions. I want to share something for you new users. I was going to do this earlier, but I didn't because, you know, shiny things. This is really for your new users, guys. This is really for you guys that are brand new. And I just want to talk through this because this happens a lot, and it goes back to the idea that it's easy to fantasize about trading like somebody that's got a lot more experience than you. The key to everything that we do is having a foundation. The key to everything we do is understanding the basics, being able to identify momentum, understanding a clear path, and then being able to pinpoint at first the highest probability entry that you could possibly take. So for all of you new users, and I know this frustrates some of you, I blanket you with very conservative rules. All about recognition of advantages, that solid plan that optimizes your chances of success as you learn to read your indicators. So for all new users, all termination conditions are bad, right? For all new users, not having momentum is bad. This is how I make it feel. I know that I make it feel like this. Areas beyond the large triggers for entry are bad. And I blanket these rules and I throw them over your heads because the goal for new users is to be successful as often as possible, to create as much confidence as possible in the very beginning stages. Because if you walk into my classroom and you try to catch every move in the market and you get the ever-loving crap kicked out of you for 7 days straight, you're going to go away. But if you walk into my classroom and you really focus on keeping it simple, within the first week, you're going to understand that you just stumbled upon the best software in the world, and now you just got to learn how to use it. But just like anything, the more time you spend with it, the more you're going to see, and this opens doors. You're seeing it in this classroom. You're seeing people take trades outside of high probability trend trades, and you're seeing them find a lot of success with it. It's because they understand the basics. But one of the biggest challenges, guys, is when new users see older, more experienced users taking trades that don't fit the rules, in quotes. I air quoted in case you couldn't see me. Because it creates confusion, right? Why did Pete trade into a termination condition? Why did Joel just jump in? Why did Paul fight momentum, right? And they're breaking rules. Why can't I break rules? They're breaking rules and getting paid. What you don't see is the 500 pictures under their belt. What you don't see is the 1,000 questions that they've already asked. And the short answer is, guys, you don't have the reps to know when it's appropriate to take these chances, to take these challenges. And then you grow and you start seeing these patterns. And you say, I can trade into this fib because of the strong top, because of the momentum, because of the tight risk, because I know exactly where my problem is, and I can read my charts fast enough to manage it. And your entries become a little less rigid, right? Your rules begin to evolve as you do. So you've got to learn the process that yields results. And then the results follow. This is where the KISS plan comes in, guys. If you keep it that basic and you follow the simple rules and you're okay not keeping up with the Joneses, you can find an extraordinary level of success. I see it all the time from people that stick to it. And the further you deviate from simplicity, the longer it's going to take you to become comfortable. So question everything, guys. I want you to question everything. If you think I'm wrong, I want you to find a polite way to tell me I'm wrong, because I am still human and I'll get defensive. And I want you to give yourself a little bit of grace. That's my wife's favorite word. You're brand new. And guys, we're going to work through every challenge that you have. You have to post in the room and show me your challenges. Anybody can be taught to do this. And the more simple you keep it initially, the easier it becomes. So I wanted to share that with you guys. Everybody's in a different spot. Focus on your spot. Focus on your spot. Man, I haven't had time to do this in a while, to just kind of throw these things out there. Feel free to throw questions in the room, guys. Interrupt me, please. The education path, and this, I'm only going to read this top one, guys. To minimize your learning curve. That's what we all want to do, right? Is minimize our learning curve. Post pictures in the room of your trades. Every trade. Win, lose, or draw. And if you win and the rules are wrong, you have a short-term victory but long-term failure. And how are you going to know the difference? You can't be expected to. To be sure, you need feedback. We're here to help. If you place a trade on the simulator, if you participate in class, you can't lose money. You need someone to tell you what you did right or wrong when you're new, guys, and this is really part of the magic that we do here. I'm not shy about telling you that you did something wrong. Jonathan, can you use that screencast link for me instead of just the picture? Sorry, man. Discord's not letting me grab those. You need feedback, guys. 15 hours every week in this room. I'm here to give you feedback on everything that you see and everything that you do. No, you're okay. That's not messing up. That's just, we create patterns. And then one more thing, and then Pete, I'll look at yours afterwards. One more thing that I want to say. Before you ever sit down to trade live, guys, before you ever sit down with live money, before you ever risk a penny that you have worked so hard to earn, you have to know what your rules for entry are. You have to know. Sure, Steve, I'll give it to you. Hopefully none of these can be used in a court of law. Guys, very often when I do these things, this is me verbally working through how I'm responding to somebody that's asking questions or doing something. So Steve, this one that I'm dropping right now, the foundation, was because someone told me that the people in my room were breaking rules and they shouldn't be doing it. He was 100% the trade police, and he was going after people in my room, and I'm like, dude, they're in a different spot. So there's that one. I'll put this one in too. I think I put it in yesterday, but the one thing that you have to know, guys, before you ever get into a trade, the one thing that you have to be sure of is what are your rules for entry. And I say this because rules have to be proven. Rules have to be 100% repeatable. Rules have to be something that you can go back and make sure that they win more than they lose. And if you can't, if you take a picture of the trade that you just took and it loses 70 times and it wins 30, guys, that has no business in your rules. Because trading is about advantages. It's about patterns. So once you know what you're going to look in, right, 101 chart reading drill, how am I going to manage it? What am I going to do with it? And guys, this is the biggest thing, because that depends on your trade. What kind of trade is it? Well, if it's not clearly drawn out, it's going to be adrenaline and fear. So you've got to know what you're getting into based on, or you got to know how you're going to trade it based on what you're getting into. And then just one more. I made this one, guys, and this is by no means gospel. This was me going through my head what it would take me to manage trades. And I did this because the more in tune you are, guys, entries are easy. I'm going to say it. Entries are easy. Everybody has an entry down within the first couple weeks. Everybody sees something that makes sense to them within the first couple weeks. Management is where money is made. There we go. Management is where money is made. So you have to know where you'll enter. You have to know where you'll exit. You have to commit to the rules. But guys, management is key. If I'm in a high probability trend trade, this is the list of things that it takes to get me out of that trade. And if something happens that isn't on this list, I stay in the trade. And then the flip side is, if something happens that is on this list, I get out of the trade. This takes the emotion out of it for me. If I'm in a 50-50 trade, this is what takes me out, right? And if neither of this happens, and we've seen this the last couple days trading live at the end of Classroom, well, then I just stay in the trade because my rules aren't met. And if I'm in a momentum trade, I have my rules. And if I'm in an HVA trade, I have my rules. And I dropped this one in the room, guys, but you've got to create your plan for what it takes to get you in the market. You have to create your plan for what it's going to take to get you out of the market. And then once you do that, trading becomes effortless. Then your only challenge is waiting for your rules to be met. Your only challenge is waiting for your rules to be met. So weak top, odds favorable, 50-50. Pete takes the pullback to the mid band inside of the triggers, moves his stop, and he just stays. Oh, finally entered all the way over here into the termination condition. Pete said, there's my best one. There's my second best one. They're starting to get bad. It pretty much sucks here, but let me take it anyway. Right into a fib. That's a tough one. I'm glad it worked. I'm glad it worked. Small chart had been telling you that the fight is beginning. But the momentum said giddy up. And Pete, you took this one without a strong top. This one's going to be less likely to work. But again, great entries give you the opportunity to capitalize even when it's not perfect. And that is, yeah, everybody always says I made bank. And Pete, respectfully, I don't care if you guys make money on one trade. I don't care if one trade pays you. I want more trades to pay you than don't. And that's why I talk about the advantages. I want you guys to be doing this 20 years from now, not just having one good day and wondering why the hell you blew out tomorrow. So don't ever use the made bank defense with me, guys. That's my one trigger point. But it's, again, Pete, momentum for the win, dude. The only time you seem to take chances are when the momentum is overwhelming in your favor. And I'm telling you, between great entries and momentum, it makes a lot of wiggle room for somebody that can read their charts. Love Big Mo. Amen. I'm going to draw a cartoon of what Big Mo looks like. What would you do with this mess? There is so much profit there. If I bought and sold momentum, there keeps going back and forth. Do whatever you want. Jonathan? Do whatever you want. It's a 50-50 trade. Here's the problem, Jonathan, and Pete, don't take offense to this. Jonathan, what do your rules say about a bad top 50-50 with multiple divergences? What do your rules say about it? But this is the thing, Jonathan. That one shot down like a rocket. That one shot up like a rocket. That one bounced like a mother scratcher. If your rules say stay away, guys, you got to work through this shit of what happens next. Pardon my French. If my rules say that with this ugly trigger look, I can't go long, then I can't go long. And if I let my brain say, but Mark, it went up anyway, well, then I'm going to try to go long every time I have this nasty little lack of advantages, right? Jonathan, and everybody in here, don't let what happens next create this whole rule remorse thing. I see it a lot. My rules said, don't fight triggers. But if I would have went long here, look at all the money I would have made. My rules say that when my small chart is absolutely garbage and can't define an area for continuation, that I'm not supposed to trade. But if I just would have been so fast and caught every up and down, I'd be rich right now. And it's a dangerous game to play, guys. I could go back like this. You guys want to see what a great trader I am? I went short right here at 05, and then I got out right here at 30, and I made $750. And then I just had a feeling that it was going to go up, so I went long right here because I thought that this might pinch, and I carried it all the way up, and I stopped 3 ticks short of resistance because, you know, it's close. And then because it was resistance, I decided to go short, and I made money all the way to the fib, and since fibs bounce, I got paid, and I didn't exit because fibs bounce, so I carried it all the way up here, and I'm already short at the pivot stop out, right? And don't even get me started about all the money I made historically here without following one rule. But I'm going to tell you guys, this one probably fit the rules. And this one probably fit the rules. I want to say you guys got paid on this one. You don't have to make $10,000 a day to be rich, guys. And Pete says if his large chart's not right, can I rephrase that? If Pete's large chart doesn't fit his rules, he won't trade. If Pete's large chart doesn't have Pete's rules met, he won't look for an entry on the small chart. Is that a more fair assessment? Because right is a very, very broad term. What's right for Pete may not be right for me. Pete might like peach cobbler. That's so right for Pete. I can't stand it, right? So it's got to be right for Pete. It's got to be right for his rules. And Jonathan, it's hard. It's hard to be patient, especially if you feel like you're missing out. I know. I do it. I'm human. Just like the rest of you guys. Steve Diego, there you go, bud. I don't know what just popped up here. So I guess my point is don't get caught up in what happens after your rules aren't met. Focus on having your rules met. And Jonathan, what you'll find, bud, is that there's so many opportunities for you to make money that you'll be great. And Jonathan, did you notice that you didn't talk about this long trade that you took? Never posted that one in the room. Didn't show me the $700 worth of losses, but you love to show me the winners. These are where the lessons come, man. And yes, I do notice these, and yes, I will point them out. Don't hide losers, guys. There's lessons in losers. What do you guys want to talk about? Termination for the win. Odds favorable momentum. Potential to break. Whoa, my rules say that if I don't get divergence, I can enter for a 50-50 trade. But guys, I won't know about divergence till the third bar. So I have to wait for a second. Man, Ollie, have you tried maybe, oh, here we go. Very top of the window. Let's see if they have it in them for a pullback, guys. Oh, let me get stops and targets in there. I am right on the brink.
Orders
of where I'm able to take a trade. Ollie, that stinks. TechSmith is, some days it's weird and some days it's not. Does everybody see odds favorable, clear path? So one divergence doesn't scare me. I have a mid-band and resistance inside of favorable large triggers. I am 2 ticks below the mid-band. And if I get filled, my stop goes 4 ticks above the top of the triggers. What do you guys think? Am I following rules? I'm not telling you to take a trade. Are my rules in the KISS plan met? Do I have odds favorable momentum? Do I have a clear path? Do I have an area for entry inside of favorable large triggers? Jonathan, as you are learning software, every trade should be a serious trade. Your brain's thinking about too much. All right, guys, we're in 1, 2, 3, 4, 5 ticks beyond the correction point. First target is 40. Second target is 30 via the KISS plan. I have the advantage of a strong top. I have the advantage of odds favorable momentum. I have the advantage of entering at the area inside of favorable large triggers. My KISS plan says I don't do anything until I get a reversal bar. I either get stopped out or I get a reversal bar, at which point I reduce my risk. Is everybody okay with this? We're following the KISS plan. I need to know that you guys are with me. Does it guarantee a winner? No. Is it obligated to go to my target? No. Does everybody see how this fits the KISS plan 100%? That I have momentum, that I have a clear path, that I had a pullback to an area inside of favorable large triggers, and even more so, that my stop is where the market shouldn't go. And if this comes down and gives me a reversal bar, guess what? I'm going to have 4 ticks of risk on this trade if I get a reversal bar. If I get a reversal bar, I'll move my stop. If it goes up from here and hits my stop, guys, guess what? I'm going to take a loser. I'm not going to jump ship quick. I'm not going to move my stops. I'm not going to do anything except wait for my plan to be fulfilled. Wouldn't it be funny if it missed it by 2 ticks and then went up and stopped us out? I would take this trade again every time. Guys, if you have a question about the momentum, if you have a question about the clear path, if you have a question about the entry, this is your opportunity to ask it. Do you notice that it keeps fluctuating? The price goes up, the price goes down, the market goes up, the market goes down. Nice entry, Pete. Guys, we went all the way down to here and all the way back up here, and we're at 0 now. Ugh. And now we're losing money. Oh, but now we're up again. Oh, now we're down more. Oh, back up. Oh, down. Son of a gun. Guys, the cool thing is once you trust your plan, you're more concerned about whether or not the execution is right. There's no obligation. No obligation for this trade to win. There's no expectation. My only expectation is whether or not I'm able to follow my rules, because my rules have been proven to win more than they lose. Well, we're moving up past it, aren't we? We're due a loser. The last 2 days we've taken live winners following the rules. Ooh, it tapped us but didn't fill us. Whoa, what happened, crude oil? You got stopped out, Pete? I probably did too, but my Ninja Trader just completely cinched up. Pete, will you give me a 2-chart picture while mine is absolutely dying here? Would you do me a favor and do that one? And Steve Diego, you took one. Guys, show me a two-part picture, please. Anybody in the room? Show me a large chart, small chart on that. I'll open back up. I'm going to open back up, but it's going to take a second. Because I want to go into the most valuable lesson that I can teach you guys. I want to go into the most valuable lesson that you will ever get in this room. I'm bringing mine up right now too. Thank you, Pete. And I'm going to take a picture of the picture, guys. Let me get a little live data going here. All right, so my job every time I take a trade, my job every time I enter the market, dang it. My computer's doing a million things. And guys, this is your new user lesson. As I bring it up, let's ask ourselves, did I have a strong top? Guys, everybody play along here. Did I have a strong top? Was it a no triggers through termination? Was it a no triggers through termination that reversed the market? Yes. Did I have odds favorable momentum? Were the smalls outside of the large? Were the large wide? Were they angled in the direction of the trend? Yes. Did all of my triggers get below support? Is it now acting as resistance? Yes. Guys, this is the greatest look I could ever hope for on the large chart. Here we go. Here's my reversal bar. Does one divergence worry me on a high probability trend trade? No. At the time of the reversal bar, these areas were still inside of favorable large triggers. My job says to activate a limit order just below. And let me write it on here. And I want you guys to give me a Y or an N. Did I take a pullback to an area inside of triggers? That's rule number 3. Yes. So, guys, why did the trade fail? Hold on. Let's go through the options. Did the trade fail because of divergence? Did the trade fail because the smalls turned against it? Did the trade fail because there started to get a space between the triggers? Did the trade fail because I didn't go long on the other side? Because anything that wins 70 to 80% of the time must lose 20 to 30% of the time. And guys, if you haven't gone back and taken pictures of the high probability trend trade, if you haven't gone back and studied it, if you haven't developed a level of trust in it, what happens is you start searching for all the reasons things went south instead of focusing on the advantages that create a trade that wins more often than it loses. And then you begin to realize that sometimes the people that move the market are assholes. Can we re-enter on a reversal bar if you're one of those guys that loves the reversal bar? I'm still calculating. I don't even know if this will work, right? So if you waited for a reversal bar to get back in because of odds favorable, because of a clear path, maybe you're saying, all right, a second higher divergence takes me out. Let me put a buy stop in there. Your risk is established because of the reversal bar. You still know where $100 is. The large chart still says down. Guys, sometimes they go past. And it doesn't mean increase your risk on every trade hoping it doesn't get you. It says take a little itty bitty hickey. And if the conditions are great and you get a confirmation bar, maybe you re-enter the trade. Does that make sense, everybody? And I was only able to get in with one contract because I forgot to put in my ATM strategy. Then Ollie, you may have different. It doesn't do either, Paul. It doesn't help or hurt. It doesn't do anything other than say, if my rules say I'll go long on a reversal bar, which obviously is ridiculous, right? All putting in a stop does. Buy stop. It says I have to have a reversal bar to enter a trade. Obviously, I would never go long. It says that I have to have a reversal bar to enter a trade. And if I never get a reversal bar, I never enter the trade. But the rules have to be met. But this one right here, once I got stopped out with this look, I might have waited. I might have waited for a reversal bar because my large chart was down with strength. So that's pretty cool. I don't mind that it gave us. And then Ollie, you got in at the mid band. I don't know how you could have and not gotten stopped out. If you were in at 52, I mean, the correct stop is up here around 57, 58. Did you leave it up around 64? So you do 10 ticks. There you go. Different plan, right? It worked out great for you this time. I like it. You have reasons. That's all we need is just reasons. All right, Jonathan. Beautiful trade. So now you're managing your high probability trend trade. What are your exit conditions? Same as Ollie, right? And Jonathan? Beautiful. Look at that entry. Just below the mid band. Solid. So now you're asking yourself, what are my rules for exit? What if I get a second higher divergence? Do I exit the trade? I don't know. That's up to you, right? If I do get a second higher divergence, can I re-enter? No, you're okay, Ollie. So good stuff. Where are your targets? That's all you have to do once you get in. Guys, sometimes they're going to overrun. Steve Diego got in just a couple ticks higher, was able to get paid and then go to break even. Why? You didn't have any reason to get out, Jonathan. You still don't have any reason to get out. What changed? My small triggers rolled over in the direction of the trade, right? Cool. Morgan, have a good one. Just have rules, guys. That's all I'm saying. Have a reason. There you go. Get paid. I love getting paid. I am a little disgruntled though, because the last 2 days we've taken big winners, and today we had to take a tiny little $70 loser. So good stuff. Guys, that's it for me. I hope you learned something today. I hope you walked in and you're walking out a little better. Why not, Steve? If that's what you want to do, go ahead. Are you saying just arbitrarily jump in? Oh, let me get my screen back up. Steve, your re-entry is up here. If you jump in here at 42, your stop's at 62, $200. with the reversal bar? Did you hear? And this is what I said in class. Maybe you got back in on the reversal bar. That's why we did this one right here. Maybe you got back in on a reversal bar. And now all you're doing is you're managing, right? What do your rules say for exit, Steve? My rules say a second higher divergence and I'm out of the trade. If that never transpires, I'm in this thing all the way to Profitville. I'll know in the next minute whether or not I'm there. So, guys, that's it for me. That is it for me. But that goes back to the whole idea that you have to know why to get in. You have to know what it's going to take to get you out. And the more clear you are, the more 100% without falter your rules become, the less stress that you have. Guys, the less stress that you have in your trading, the less stress about wondering, should I exit? Should I go? Should I